Welcome back to ICT Trading Concept. How are you all? Just let me know that you can hear me. Voice is clear. Then we will start our new day session. Okay. Just write it down. If you can hear me perfectly, if everything is okay, then let me know that. Okay. Nobody's writing. Is there anyone actually? Yeah, there should be some people. Very little, but there should be someone. Please let me know that you can hear me. Okay, really so important. Hear me? Sound clear, boss? Can you hear? Okay. Thank you. Thank you guys for letting me know that you can hear me. Okay, but just let others join. Give me 5 to 10 minutes. Okay, I will talk about the Friday price action. Then I will go for this week analysis. Okay, just let others join. I mean, just 5 to 10 minutes. I guess within 5 to 10 minutes, I will get everyone who is interested to stay here. So I would love to go to Friday price action. Sound is good. Thank you, Domino. Thank you, brother. So this is the Friday price action. And so this is the Friday price action, and this is from the daily chart. This is all-time high, and the narrative. Okay, the narrative is when price will. I mean, this was the expansion day. This is the continuation of the expansion. Friday should close. I mean, inside the weekly range. Okay, this is the weekly range. Monday, Tuesday, Wednesday. Sorry, Monday, Tuesday, Wednesday, Thursday, Friday. It should close inside the range. Now, as I told from very beginning that my bias is bullish until it has taken the all-time high. Okay, so it has taken the all-time high in Wednesday. After taking that all-time sorry all-time high, it actually come back again into the range. Like in over here, dollar index. As I told you that I was expecting price will come here to this volume balance. Now, yeah, price didn't came exactly to the volume balance, but I got the run. Okay, when it came here, it was the last. I mean, last 15-minute fair value gap around that area. At the same time, last 1 minute fair value gap. Price came here, went higher. So everything was expected last week and the before week. Okay, so 2 weeks our expectation was perfect. Now I would love to spend some more time over here to this what to say Nasdaq Friday price action. So this was the candle from Friday. What is the narrative from Friday? It should close below the weekly range. Now it can go outside of the weekly range, then it has to come back again into the weekly range, and it has to close inside the weekly range. So that was expected. Okay, I will go step by step. So from here, if you remember, this was our sell side liquidity from okay. So and that was the fair value gap from hourly fair value gap. I have already explained why I have marked the hourly fair value gap, because from 15-minute chart there is so much messy. You can see here messy price action. So no clear price action or fair value gap from 15-minute chart. But when I came to hourly chart, I got this entry gap. This was my first gap, and that was the last fair value gap. Where did price go? To this last fair value gap, hold it and send it back. Where? Toward that liquidity. So in Thursday, we got our liquidity has taken over there. Okay. In Thursday, specifically in Thursday, it has taken the liquidity. Now I will come to this Friday price action. I'll go to 15-minute chart now. So this is the 15-minute chart. And from 15-minute chart, before the day start, okay, before starting the day, I told that Hardik, hey brother, how are you, man? I'll just start my weekly analysis after sometimes. Okay, I just need to talk about the Friday price action, how we actually take our entry over there. I actually reset my, what to say, I mean the paper trading account, as well as I have taken the entry to my TradeOvet account, I mean the top step account, and I uploaded them to my, what to say, the Twitter. So I just need to show you the price action over there from Friday. So I would love to mark the Friday. So it will be from here. So this is the first candle from Friday. Okay, this is the Friday first candle. I mean after Thursday, it has opened in Friday. I mean this candle actually I will count inside the Friday. Now if you ask me from where exactly I will mark as my Friday, this is my Friday session started from 12 a.m. in the morning. This is the Friday price action. I mean the Friday will start from there. Just look at the price action here. Before starting the day, I told you please mark the new day opening gap. So I have this new day opening gap. I have another new day opening gap from Thursday. I will keep them until 7 days. Okay, it will stay in my chart for 7 days. After 7 days, I will just remove them from my chart. Why I have marked this new day opening gap? Why I didn't talk about the new day opening gap in Wednesday, Monday, or Tuesday? Because just look at the differences. Okay, here I got near about 16 handle, and here is near about 8 to 9 handle. Okay, if I see more than 6 handle or 5 handle, more than, okay, if the gap is more than 5 handle, I would love to keep them on my chart. The very important thing is new day opening gap, open, high, and the consequent encroachment. Now I didn't mark the consequent encroachment, but if you want, you can mark the consequent encroachment and you will get the precision from there as well. It's up to you. Okay, so this is the new day opening gap, and this is the Friday price action from this vertical line. Okay, from here the new, I mean the Friday price action has started. So, okay, now when price came here, just here, okay, it has made relatively equal high, equal low. See this low and that low, they are relatively equal lows. I have this swing low. All of this liquidity has been taken by that swing low. That is also a shallow run. Why shallow run? Because nobody closed below the sell side liquidity. There is no body. Everything is weak. So when there is weak, I will count them as my shallow run. So whenever I see this, I just mark the low of that shallow run. That is my liquidity. So that is my liquidity for next. Okay, for further price action. Come here, look over here. What is our narrative? That market has to stay, or if it went higher, then it will come back again into the range. From 15-minute chart, this is the way you will learn. Okay, don't just spend your time by watching my entertainment over here. Don't do it. So I am in 15-minute chart. First thing first, you have to look for liquidity. Where is your liquidity? Do you see any buy side liquidity around that area? What is buy side liquidity? Relatively equal highs. Do you see any relatively equal highs around that area? Okay, just look at the chart. This chart. You don't need to come so far. No, you don't need it. You just open your chart. Just think you have just opened your chart here. I mean at 9. So you open your chart here somewhere, and you should look for liquidity. Do you see any buy side liquidity around that area? No, I don't see. No relatively equal highs from 15-minute chart. Do you have any sell side liquidity from, I mean below the market? Yeah, I have this low and that low. They're relatively equal lows. Okay, I have only the sell side liquidity. So what do I mean by that? That means my bias is bearish. Why bearish? Because market should go for the liquidity. It doesn't need to go opposite of the liquidity. You have to understand the narrative first. This is the Friday. Market has to close inside the range. So you have to mark Monday, I mean Sunday low and Thursday high. Okay, until Thursday the high from Sunday, low to high or high to low. You have to mark them because you will get the range over there. Okay, if you are confused, please ask me the question. Now I have only the sell side liquidity. So what is my target then? I should target for sell side liquidity. I'll go to 1 minute chart. So there is 1 minute chart, and I would love to mark the 9:30. So I guess here, this is the 9:30. Okay, from 9:30 my expectation is market will go low. Now as I told, let me make this 2 here. On my right, that is 1 minute chart, and on my left, that is 15-minute chart. Okay, don't get confused by them. This is 15-minute chart and this is 1 minute chart, and this is 9:30. That is 9:30. I am just removing this one so that you will be understand. And see, I don't have so many level to my chart. I don't have that. What I have is new day opening gap, new day opening gap, and the sell side liquidity. And I actually add them later. That last 15 minutes I add them later. Now I am in 1 minute chart. I have to see both of the chart at the same time. Okay. So around 9:30, do you have any buy side liquidity? No, you don't have. Do you have any sell side liquidity? Obviously you have. What should you look for? Market has to take some liquidity first, or it has to trade any higher time frame fair value gap. So this is 9:30. Okay, I'm just moving it little bit. So this is 9:30 candle. Do you see any fair value gap around that area from 15-minute chart? Because your bias is bearish. You have only sell side liquidity. This is how you will determine your trade. You see this fair value gap? This is a fair value gap from 15-minute chart. Very nice fair value gap. At the same time, you have new day opening gap. Okay. So when this run happened, look, price went higher. Where did it go? It came inside this 15-minute fair value gap. Let me mark the 15-minute fair value gap. This is the 15-minute fair value gap. Where this run came to this 15-minute fair value gap. At the same time, it came to the new day opening gap. Now, it didn't trade the new day opening gap low perfectly. Yeah, I agree with you. It didn't just close. I mean, it didn't touch the new day opening gap. I would love to see it will touch that new day opening gap, but you don't need it. You just see how it came here. Okay, very nice. After coming here, did it take any liquidity? Buy side liquidity? It has taken this highs, that high as well. Every liquidity has taken over there. After 9:30, it has taken. What do I need then? I need a very nice displacement. After taking the liquidity, just let me mark it. It has taken this liquidity, okay? But brother, it didn't take that high. See, it didn't take that high. I don't need it. Why? See where price came inside this 15-minute fair value gap. That's enough for me. That's enough. All I need, it will take some liquidity. Now, when it has went above that high, already my liquidity has taken. When liquidity has taken, was there any displacement? No. So I am waiting. Market went higher one more time to take that high. Okay, I'm cool. Do I have any market structure shift or displacement? Yeah, brother, you have. Now I have a very nice market structure shift. Anybody has any complaint about that? This is my market structure. Now I am not looking for higher market structure shift. Why? Because I have only the sell side liquidity. See, I have only this sell side liquidity. I don't have buy side liquidity. So here I'm the price is over here. So when I don't have any buy side liquidity, I'm not looking for market will take some lower liquidity and it will give me higher market structure shift. No, I'm not looking like that way. See over here, it has taken liquidity, market structure shift. Over here, it has shifted that market structure. Very nice displacement. Look at this three candle. Very nice displacement. So am I going to buy here? No. Why? Because I have the sell side liquidity only. When I have the sell side liquidity, I will say it will take some buy side liquidity, then it will give me lower market structure shift. Now, do you have any two fair value gap? Let's see. Okay, so this is a fair value gap, lower fair value gap, and I have this breakaway gap. This breakaway gap. Now, what is the rule? Rule is market can't go. I mean, market can close below. I mean, above the breakaway gap. Now, brother, it actually closed above the breakaway gap. Why? Because we had a news over there. If you remember, we had a news. So far, I remember we had a news around that area. Just let me check actually. So, not here. Last week. See, at 10, we have a news. We had a medium impact news at 10. Before the news, always expect this type of thing. I mean, not precise price actually. Before 10. That is why This setup is not perfect, but yet if you take that entry from here, you take your entry over there, and if you can cover your stop loss at around that area, you will get a very nice run. I mean, until here, that should be your target. You have to take a partial around that area. If you just watch the price action below this, see this is relatively equal lows from 1 minute chart. This low, sorry, from let me mark it. Okay, so here that is relatively equal lows. This low and that low, they're relatively equal lows from 1 minute chart. You have to take your partial around that area. You have to put your stop loss to the break even. But brother, that is a very small run. Okay, let's see how much it will be. 25 handle, man. It's not small, it's huge. Hey George, what is the main work of new day opening gap and just buy below and sell above or something else? Danish Khan, there is nothing in this. I mean, on the chart, there is nothing that will tell you please buy here, please sell here. You need some kind of level. Okay, this is a level where you will expect some kind of reaction. When price came here, that is the reaction. When come here, we will expect, we will anticipate a setup around that area. When why I marked that fair value gap from 15 minute chart, because when market come this fair value gap, I'm expecting lower time frame setup. If I get the setup, I will take my entry. If I don't get the setup, I have nothing to do. So we actually expect, see over here, when price came here, this new day opening gap one more time, was there any setup? No setup. So we have nothing to do around that area. So we will expect the setup whenever it will reach to an I mean any kind of higher time frame level. Okay, so this is the higher time frame level. This new day opening gap, you will get it from very high, okay, very high time frame. You will get that from daily chart. You will get that. So that is a very higher time frame level. Like here, 15-minute level. Whenever market came here, if you see there is a liquidity around that area, you are allowed to take that entry. Now I'm just removing it because you can take your partial over there. You will be maybe stopped out to the break even. Now I'm not suggesting you to take this entry because we had a news at 10. When we have a news above, I mean in front of us, we should not take our entry. We should not. Okay, we have to wait for the news to release. Okay, now come here. Why I'm expecting an higher run? Why it is important? Okay, see this relatively equal loss from 1 minute chart. Market has taken that sell side liquidity. Okay, hey Saddam, how are you, brother? I'll just start my weekly analysis, but after some times. Okay, I just want to explain the Friday price action. We had near about 7 winnings. Okay, if I can show it to you. Second. If I didn't okay, I didn't actually lead them. If you see, oh wait, okay, okay, so that was an entry. There was, sorry, here one, here was another entry from all from Friday. Okay, all from Friday. This or there was another entry over there. See here, the Friday 26th January, everyone was winning trade. Every single was our winning trade. So we had near about 7 entry and on that day, and we got all of them. Just let me explain that. Okay, everything was my in my screenshot. Now, when price came here and it has taken the liquidity around that area, this relatively equal loss has taken by that run. Okay, after the news. So we had the news at 10. After the news, it has taken the liquidity. This has taken the liquidity. Look, this low, okay, this low here, that low. Now, is that low did trade any high time frame liquidity? I mean, sorry, fair value gap. Yep, I have this fair value gap. It has traded that fair value gap from 15-minute chart. Very nice fair value gap, very perfect. So when it has I mean traded that fair value gap, what I need higher time frame liquidity. Now, do I have any higher time frame liquidity or not? Let's see that. Okay, from here, this high and that high, they are relatively equal highs. Let me mark it. Okay, here. Just let me mark it one more time. Okay, I have marked that high and that high. Are they clean? Is that clean liquidity? Do you see how clean that liquidity? So this is relatively equal high. At the same time, I have this new day opening gap. Why it is important? Why I'm going over there instead of coming here? Now, the reason is when I have seen that liquidity, that clean high from lower time frame. From lower time frame, I have got this clean lows. After the news, it came here. At the same time, it failed to trade that new day opening gap perfectly. It came here to this higher time frame fair value gap. It come here. After coming here, all I need a market structure shift. If I get a market structure shift, boom, I will go for that trade. Okay. Now look, from 1 minute chart, price went lower, taken the liquidity, it started to consolidate. What I told you, I always prefer for immediate reaction. Okay, so market when it started to consolidate before this displacement, look at this displacement, look at this little low. It has taken all the consolidation. All of this consolidation has taken by that run. Then boom, market structure shift. Where is my market structure shift, brother? There is no market structure shift. I have this market structure shift. Very nice market structure shift over there. Why this is market structure shift? I have a swing high on my right. I have a swing high on my left. Both of them are lower than that swing high. Now, is that a market structure shift? This one? This one? No, this is not market structure shift. Why not? Because this didn't trade any fair value gap, or it doesn't have a swing high on my right, on my left, which is lower than that swing high. So there is no swing high that is lower than that swing high. So it is not valid. Brother, is that market structure shift? I'm telling you because one of my brother actually asked me why this is not market structure shift. Look, this high is also not valid for market structure shift. Why it is not? Because it didn't trade any fair value gap around that area. No fair value gap around that area. Now it has a swing high on its left, which is lower than that swing high. It's perfect. But look at the right. Is there any swing high that is lower than that swing high? No. So this is not valid. I'm going to remove it. This is not valid. Remove it. This one perfectly valid. Swing high, swing high, so many swing high on its right, on its left there is a swing high. This is my market structure sheet. Is there two fair value gap? Let's see, is there two fair value gap or not? This is my first fair value gap. Here, is there any other fair value gap? Okay, there is another fair value gap, that is actually the breakaway gap. Am I interested to take that buy? Obviously, I can take that buy. When market came here, that is my buy. I will cover this breakaway gap. Where is my target? This is my target. That buy side liquidity is my target. Now how many handle? 59 handle. Oh brother, here that entry was for 25 handle. Okay, cool, no problem. Here how many handle? 59 handle. Just multiple it with $20. You will understand how much it will be. Now price came here, okay? One time it started to struggle. What it will do, we don't know, because now we have only the sell side liquidity. We don't have any buy side liquidity. Now we don't have any buy side liquidity, okay? Market is struggling over there. Yeah, there was a setup around that area, but I don't want to talk about that one because that is confusing, okay? Finally, it came here. Trade the new day opening gap high. Look, that is a higher time frame level. Here, no setup there. Okay, I was waiting for a setup around that area. There was no perfect setup, so I'm not interested to take sell there. This displacement, I don't care. Why I don't care? Because look how it went higher and it has made relatively equal highs. Okay, that is relatively equal highs. It didn't take that liquidity. Instead of that, it has made the relatively equal highs. So that high and that high. Just if you can see, okay, they have made the relatively equal highs. Now this run, look at that run, boom, it has taken that liquidity, see, and at the same time it has traded new day opening gap high. So this is a level where market will come and we will expect some kind of setup. Now I'm looking for setup, boom, it went lower. Is there any market structure shift? No market structure. No brother, there is a market structure shift. This is my market structure shift. Why that is your market structure shift? Is that a swing? No, that is not a swing. That is just a low. Even that though that low didn't trade anything around that area. Even if it trade, I don't care because this is not a swing. That is just a low. Try to understand, brother. This is not a swing low. This is just a low. See, this is a run, upper run. There is no swing. When market was going, okay, here. When market was going lower, see how it went lower. Swing, swing low, broken swing low, broken swing low, broken swing low. This is swing, okay. And when market started to go high, see how did it went higher? Was there any swing? There is no swing. That means it is not a swing low. This is just a run. You have to understand, okay. So when market is going higher, there is no swing. It just went higher, and this low is not a swing low. If you don't understand, I guess you have to waste more time. So this is my swing. See, this is a swing. Look at that swing, and this swing low is perfect for shifting market structure. If I saw that candle actually break that swing low, I would love to take my entry over there to that first parallel gap. I would love to cover my second breakaway gap. As I didn't get the market structure shift, I have nothing to do around that area. Okay, market went higher one more time, it broke. Then now when it broke, very difficult. See how it broke. This is a swing low which is valid for shifting market structure. This low, now I don't care about that low because I have another swing low that is valid for shifting market structure. Is this valid market structure shift? Obviously. Do you have two fair value gap? Let's see. I have one fair value gap here. As it has taken already this liquidity, I'm just going to remove it. Okay? It has another fair value gap and sorry, entry gap and the breakaway gap over there. This is the breakaway gap. What is the rule? You have to take your entry to this first fair value gap. You have to cover the breakaway gap. Where should be your target? Man, you don't have any liquidity, so why you are going to take that entry? Because you don't have any liquidity. I have liquidity, maximum liquidity here. Are you going to hold it until that? Never. Then where you will target actually? Where should you target? This is that area, okay? Look at this area. Around that area, you are actually going to take that entry. Just target here. Let me show it to you. Target the new day opening gap. Just here. New day opening gap high. Target over there because this is a high time frame level. It can be hold the price. You can get another reaction from there. Just hold it until there. Now, if you want to more, I mean, if you are more aggressive, hold it until the last fair value gap. Okay, it is little bit difficult, but never hold until the maximum liquidity. That is the maximum liquidity. Please don't hold it. If you even hold it until here, that new opening gap, this thing, okay. How many handle? 27 handle. Is it huge? Obviously, it is huge. Is there any way to stop out? No. Was that logical? Obviously logical. You got the high time frame reaction. All I need to say high time frame reaction. Was there any high time frame reaction? Obviously. 15-minute fair value gap, also new opening gap. Was there any higher time frame reaction when I took that buy? Obviously. 15-minute fair value gap. So I went here and waited for the setup from 1 minute chart. Was there any high time frame reaction? Obviously, this is the new opening gap. When market came here to this new opening gap for the first time, was there any setup? No, there was no setup. Why there was no setup? Market came here, it went lower. Is this valid for shifting market structure? Obviously no. Why? Because it didn't trade any fair value gap around that area. No fair value gap around that area. So this swing low when shifted, I don't care about that. This is not market structure shift. Market went higher. Brother, what will you say now? Is this a valid market structure shift? Obviously no. Why no? Because this low is not valid for shifting market structure. Why not? Because this low didn't trade any fair value gap. It has a swing low on its left, one, two, three, maybe three swing low on its left, which is higher than that swing low. Do I have any swing low on my right, which is higher than that swing low? No, but there is no swing low. So is this a valid market structure shift? No. Are you forcing market? Just ask yourself if you are forcing or not. I am just showing you every single thing, okay? So this market structure shift is not valid. Now market went higher. Did it take that liquidity? Just look at this. Is that taking liquidity or is that building liquidity? Obviously this is building liquidity. I have taken this entry, okay? When market came here, I just took my entry around that area. I closed my trade over there, okay? With me, George was there. I mean, when I actually taking that entry. George and Remy, I don't know Remy and George is here or not. I told them that I'm going to take that entry. Okay, so that was my entry because that was my buy side liquidity. I'm not looking for sell here. Why? Because it didn't take the liquidity. Instead of that, it has made the liquidity. Remember over here when I actually talked about the first entry. Okay, over here, look, this high and that high, they are not relatively equal high. See, so when it went higher, it has taken this high. I'm just thinking it has taken that high, finally that high, just a single high it has taken, but it didn't made relatively equal highs. But just compare this with that, you will understand what is the difference. Okay, don't force the market. So it is not a liquidity taken. I take that entry. I'm not telling you to take that entry. I'm not telling that because it could be a very small trade for you, but for me, yeah, it's huge, man. It's huge. From here to here, 23 handle. It's huge. It's near about $500 for me, just for one contract. Okay, what I am telling you, wait for taking the liquidity. It has taken the liquidity. When it has taken the liquidity, was there any hard time frame, anything around that area over here? Was there anything from high time frame? New day opening gap. This is from daily chart, daily, hourly, 15 minutes chart. Every single time frame will show you this opening gap, new day opening gap. Very strong, very strong. I have a very nice high time frame. What to say, the high time frame level. Okay, look here, new day opening gap low, it came to this low. It told me that, brother, you are valid to take that entry. See this high, this swing high, not that one, not this one, this swing high. When it is shifted, I got my market structure shift. Why this swing high? Because this is a swing. Look, just swing, a very nice swing. And this swing actually trade that fair value gap. Market structure shift, first fair value gap, last fair value gap. I take my entry over there, I cover the breakaway gap. That is my target. I'm not telling you to take that on that entry. I'm telling you here to take that entry. When market has taken this buy side liquidity, this is the swing low. It has come here. Is that immediate reaction? Market was consolidating over there. Okay, look at the consolidation. Very nice consolidation. Now, before this displacement, can you see what this candle did? This one candle, what it has done, it has taken all the liquidity over there. Just this candle, it has taken all the liquidity around that area here. It has taken all of them. Now when it has taken all of them, did it make relatively equal highs? Is that high and that high, they're relatively equal highs? Like here, can you see the difference? This is how you will understand the price action. Okay, it has taken the liquidity, boom. Just look at the displacement. Very nice displacement. Two fair value gap. Yeah, one, two. Take your entry over there. Don't wait for 50% retracement. Don't wait for that. Even if you see how many, how, well, look, just look. Okay, one, two, three, four. I have already shown you four entry where it has actually traded the breakaway gap. Sorry, not that here. This one. It has already traded the breakaway gap. Maybe you are stopped out. Okay, maybe you are stopped out. Though prices, why price make that, I have already told you, because that was just before the news. That is why the price action was like that. That is why it happened like that way. Now, if you don't just, if you just skip that on, I explain why this is not valid, because there was news at 10. Just look here. Did it reach to here? No, it didn't. Now, if you ask me, brother, please, just here to here. This is by 50%. Look, that is my 50%. Did it reach even to the 50%? No. Where did it reach? To this, that first, I mean, first fair value gap. Yeah, obviously it can reach over there. That's why I told you your stop loss has to cover the breakaway gap. At least the constant encroachment. At least the constant encroachment. Look over here. Did it reach to at least 50%? No. First fair value gap, boom. Was there any fair value gap? I mean, market even trade over there or 50% to that range? No. It just came to this first fair value gap, boom. So that entry I took. I have taken this entry. I have taken that entry. I have taken that entry. I have taken this three entry. I didn't take that on because that was just before the news. Now I will show you more entries over there. Okay, I actually forget where was more entries. Now I'm just going to just use this one here. Okay, this is that 15-minute fair value gap. Okay, this fair value gap, the same fair value gap. When price came here, what it has done? Look now, this low and that low. What it has made? Relatively equal lows. So let's look over here. This is relatively equal lows. Okay, what do you have? Relatively equal lows. If you come to 1 minute chart, guys, I will go to the weekly analysis, but please let me finish this. Okay, it will help you. Trust me, brother. See, this is a shallow run. Okay, market just went little bit below that low. That means liquidity has taken. At the same time, it has made that low more stronger. Okay, market is going to take that. That is now obvious. This is now obvious liquidity. Now, when market trade here, it has taken that liquidity from there. Okay, that low has taken. Was there any higher time frame level? Yeah, I have this 15-minute parallel gap. Why this gap is important? Look to this 15-minute gap. It has taken this liquidity, market structure shift. This is the first parallel gap. This is the breakaway gap from 15-minute chart. Okay, first parallel gap, that means entry gap from 15-minute chart. Last parallel gap, that should be the breakaway gap. Market came here to this first parallel gap, boom. Market come again to this first parallel gap, boom. Finally, market reach here. Where did it reach? Just the breakaway gap. Just the breakaway gap. If you just let me show it to you. Look, this candle low. Okay, look here. Just look here. If you just okay here. See this low. Look at the number around that area. You will look at the number around that area. What is the low? 17496.75. 17496.75. Look at this candle's low. Okay, same area. Just let me remove it little bit. Okay, 17496.75 are the same. Absolutely. So this is the starting of that fair value gap. Price just tapped there, it went little bit higher, closed over there. So this is the fair value gap. Now what I was talking here, that is why this fair value gap and that fair value gap is important. That is my high time frame level. Okay, now price came here, it has taken the liquidity, it has taken this liquidity and also the longer liquidity from there. That low has taken already here. After taking the liquidity, I got this market structure shift. Now this high, swing high, is that valid for shifting market structure? What do you think? This is valid for shifting market structure? I don't care about that swing high. Why this is not valid? Did it trade any fair value gap? No, there is no fair value gap. Do I have a swing high on my left, on my right? Both of them should be below that swing high. On my left, yeah, I have a swing high. Sorry, that is a swing high which is lower than that swing high. Do I have a swing high on my right which is actually lower than that swing high? No, I don't have. So is that valid market structure shift? Obviously no. Now look over here. Just that candle. Is that a valid swing high? Look at the swing. Okay. Now it is a candle which has made the high, but actually I have a swing here. There is a swing. Okay. Market start from here. It come here. Then it went lower. So this is a swing. This is the high. Is that high valid for shifting market structure? Look on your left. Was there any fair value gap? Obviously, you have a fair value gap. So is it valid? Obviously, it is valid. It is shifted around that area. Obviously, it is shifted. Is it an immediate reaction after taking the liquidity? Boom, immediate reaction. Do you have? Do you have two fair value gap? No, I don't have. I don't care. I don't care. I don't need two fair value gap. I have only fair value gap. This is my fair value gap. What should be your entry here? What should be your stop loss below that low? Below that low, you have to put your stop loss below that low. Why? Because if you have two fair value gap, it will help you to put your stop loss below the breakaway gap. But if you don't have two fair value gap, you have to put your stop loss below that low. Now when I have taken that entry, I actually put my stop loss below the breaker. Okay, that was the breaker, low, high, lower low, a very nice valid breaker. So I actually put my stop loss below that breaker. But if you don't understand what is breaker is, then you have to put it below that low. You have to do it. Okay, now where I'm going to target, brother, there is so many, I mean, what to say, the so many things over there. So where I should put my target? Look that high, this high, all of those high, they're relatively equal high. That should be your target, that swing high. Okay, so I'm going to mark my entry over there. That should be your entry. Your stop loss should be here. Okay, for you all. Okay, you have to put your stop loss over there. that should be your entry. What I told you, always go for the partial. Where should be my partial level, brother? There is no swing high that was near that swing high. I mean that buy side liquidity, there is nothing. So where I should take my partial, you have to take your partial there. When market will tap there, the lower of the last fair value gap, you have to take your partial there. You have to put your stop loss to the break even. Okay, you have to do it. There is no other way. I have taken that entry. If I can show it to you, actually, let me find if I can get it. Just a second. This was that entry. See, just look at this price section. Just look two. Okay, 1400. Look over here, 1400 and 1430. Okay, so that was another entry. This was another entry at 1400. Don't forget 1400. Just let me show it to you. Look here, 1400. See, that was my entry. Absolutely, in that candle I took my entry. Sorry, here. Oh, okay, sorry. The before candle, actually, not that one. The before candle, when it tapped to the first parabolic gap, I took my entry over there. I took partial over there. I got stopped out over here. Okay, so that was my entry. So I actually reset my account after uploading the entry video, last video. I have reset. If you are with me in my Twitter, you have already know that. And I know, guys, if you are getting bored, please tell me. I will just stop the Friday price action. Everything I'm talking here, as I was not, I mean, I wasn't live streaming. That's why I'm just explaining the price action. Okay, please let me know if you're getting bored. Then I'm just going to leave it and I'm gonna start the weekly analysis. It's it's up to you. Okay, but you have to write it down. Okay, just let me know that should I continue this or should I go for the weekly analysis. Please let me know. I think this is important for you. That's why I'm talking about this. Please don't skip this. Write it down. Why this is valid? Market taken the liquidity. The reaction from higher time frame fair value gap was that immediate market structure shift. Obviously, immediate market structure shift. Did it trade that fair value gap immediately within three candle? It has traded. Boom. Now it didn't take that buy side liquidity. Brother, you are wrong. Yeah, I'm wrong, but I have already taken my partial over there. I put my stop loss where market shouldn't come. Yeah, market came. I got stopped out. I have already taken my partial, so I'm already profitable. And even that was my entry. I stopped out around that area because that is, I mean, that fair value gap should be unfilled. When it is filled, I got stopped out. Please write it down, guys. Please don't skip that my question. Should I continue this until the end of this Friday, or should I go for the weekly analysis? Okay, I will go whatever you will ask. No problem. So that was another entry. Now why I have taken that entry. What was the reason for taking this entry? Okay, this is little confusing, but I guess you will see this entry. I have taken another entry around that area, and I closed my trade when it has taken that buy side liquidity over here. So that was another entry from there to there, another entry. Why that entry is valid? So I'm now talking about this entry, this candle. Okay, if you don't if you don't write it down that should I continue or not, then I'm gonna. Okay, bro, okay, bro, which fair value gap has more efficiency to deliver the price? I always care about two fair value gap, first fair value gap and the breakaway gap. So both of them are important for me. Except these two, I will. I'm just skipping. Okay, I don't care about other fair value gaps. Like over here, no fair value. I don't care about anything over there. Okay, I just care about first fair value gap, breakaway gap, and the last fair value gap. That's all. Just a second. Mm, mm. Just a second, guys. I guess that is the easiest way to understand the thing. I have just started a poll. Let me know that what is actually important. Okay, I mean, what do you want? That will be easier for me as well. Just vote over there. Okay, I guess that will be easier for me to understand what do you want actually. At the same time, I'll just try to. It doesn't take so long. Okay, I guess within 5 or 10 minutes, I'll just complete this one, and we don't have any rush. So if you want, I can continue, or otherwise I will just stream it. Just vote over there. That's all, brother. This was another entry. The reason was price actually trade that order block. That was my order block. The rules, I'm not going over there. When it has traded that order block, went higher with the displacement, I have taken another entry to that breaker. See this breaker, the up close candle over here. That was up close candle. I take my entry to, depending on that breaker, and I put my stop loss below the breaker. I just below the breaker I put my entry, and that relatively equal highs, that is my target. I'm not going to hold it until that new day opening gap. If I want, I can do it, but here I have to take a partial. But I have taken entry over there, over here, and I just close over there. Okay, so from here to here, how many handle? 18 handle. It's a very small, I know. It's a very small, I know, but for me, it's huge. For me, it's huge, brother. Finally, that was the last entry from Friday. Price went higher. It came here, okay? Exactly to that candle. This candle, it came here. What do I have in that area? Now, what do I have here? I have this liquidity from long time ago. Very clean sell side liquidity. Now, price has made another sell side liquidity. So I have two sell side liquidity that is so clean. Okay, no buy side liquidity around here. I have that buy side liquidity. See, this all of these high are relatively equal high, and it came here, it gave me the reaction. I can go for that. You have to understand the narrative as well, brother. So I went for that because it didn't take that. So instead of that, it went lower to trade that parallel gap, I mean water block. It went higher, breaker, put tap to the breaker, boom, it has taken that relatively equal highs. Finally it came here. Now, when it come here, see, just exactly try to understand, brother. This is the difference between you and me. So not for sorry, I'm extremely sorry, not you and me. This is the difference between the successful trader and us. We are failure, they are actually profitable. Why they are profitable? Because they follow the rules. When price come here, you are in 1 minute chart. What is this level? A very high time frame level. So you have a very high time frame level. At the same time, do you have any fair value? Just for example, just think there is no new day opening gap. Okay, I agree with you. There is no new day opening gap. Is there any 15-minute fair value gap? Just look at this 15-minute fair value gap. I'm just marking it. So this is the 15-minute fair value gap. Look, this is the first time price came into the 15-minute fair value gap. Okay, just forget about this new day opening gap. As you can see, it has traded the new day opening gap low. How perfectly, how precisely it has traded. Look at the bodies. I don't care about the week. I care about the bodies. Just look at the bodies. How perfectly traded there. When it came to this 15-minute fair value gap, you will see it has traded into the 15-minute fair value gap. So I'm going to remove that 15-minute fair value gap. Look on my left, that is 15-minute chart. On my right, that is 1 minute chart. Trade here, boom. What a nice displacement. Brother, this is my first fair value gap. This is my breakout gap. I'm going to take that entry and see later it worked perfectly. Was there any market structure shift? Is there any swing low which is valid for shifting market structure? I don't think so, man. I don't think so. If you force the market, oh no, don't do it, man. Please don't do it. Don't force the market. There is no market structure shift. So this displacement, this high time frame level doesn't matter. It doesn't matter, man. All you have the sell side liquidity. This is your sell side liquidity. So you have only this sell side liquidity and this sell side liquidity. You have sell side liquidity, no buy side liquidity. So why you are looking for sell? Because you have liquidity on, I mean, below the market. Above here you have nothing, nothing at all. When you don't have anything around that area, you should not go for that. You should go for the sell side liquidity. Now this here I don't get any market structure, no problem. Market come here, it spends so much time. Again displacement. Was there market structure shift? No. Market is consolidating. Look at this consolidation. Just look at this consolidation. And this swing low now is valid for shifting market structure. Why this swing low is valid for shifting market structure, brother? It didn't trade any fair value gap. It has no, no perfection. Why it is? Okay, let's see. I have this fair value gap here. Did this swing low trade that fair value gap? Yeah, it has traded. Now, is it valid? Obviously, it is valid. Okay, forget it. Just think you didn't see that it has traded that fair value gap. Do I have a swing low on my left which is lower than that swing low? Here, I'm just going to mark it. This one. I have this swing low which is lower than that, higher than that swing low. Here, if I force the market, I will get another swing low. Here, I will get another swing low, but I don't need them. Okay, I have one. I'm happy with that. On my right, do I have a swing high? Swing low, which is higher than that swing low? Here, I have one, two, three, four, five, six. How many have I have? So it is valid for shifting market structure. All I have is this swing low. If it is shifted, I will go for the trade. But brother, you told us if you see immediate reaction, then go for the trade. If you don't see the immediate reaction, if you see this type of consolidation, then don't go for the trade. Okay, let's go. Market make this swing low, started to consolidate. Okay, this is the consolidation, pure consolidation. Now this is the displacement. Anybody has any complaint about this displacement? Look, there is not even a single bull candle. Just boom, it just fall, boom. Look where the run started. Here, this is the candle. What it has done, this is their consolidation high. Okay, all of this consolidation, there is swing high, there is swing high, everything is has taken by that small swing, see, small run, by that small run, it has all taken. Was there any liquidity? Now do I have any buy side liquidity? No, I don't have anything. After taking the buy side liquidity, did I get the displacement and the market structure sheet? I have. Very nice way. Look here. After taking the sell side liquidity, was there a perfect market structure shift? Perfect market structure shift. I'm sorry guys. So if I come where here, after taking the market, buy side liquidity, little consolidation. Okay, after making this swing low, little consolidation. After taking the liquidity, was there displacement? Immediate reaction. Immediate reaction. After taking the sell side liquidity, was there a immediate reaction? Immediate reaction. And where? I think here. After taking the liquidity, was there an immediate reaction? Look at this run. Boom. Just it went higher. Look at this candle. What it has done? It has taken all the liquidity of this small consolidation. Very small consolidation. It has taken. See, this sell side liquidity has taken over there. After that, after taking the liquidity, boom. Is that immediate reaction? Obviously, it is immediate reaction. Everything is same, or I'm just changing my word in hindsight. Okay, is that hindsight? Because one of my brother actually told me that to stop this hindsight. I don't know how it is hindsight. Is that market structure shift? Perfect market structure shift? Do I have two fair value gap? Let's see if we have two fair value gap. This is my first fair value gap. This is my this is my breakaway gap. Okay, why should you take your entry to this first fair value gap? Was that immediate reaction when it has made this fair value gap? Is that immediate reaction? Look, I'll just count the candle. Okay, after shifting the market, 1 2 3, the three number candle has traded that fair value gap. If you are with me for last three entries, I have taken YouTube in front of all of you to my TradeOvate account, not the paper money. Okay, TradeOvate account. What I told you, I got my market structure shift. I need immediate reaction. I will count three candle. If I get the trade within three candle, I'm gonna take it. That is the immediate reaction for me. Is that an immediate reaction? Obviously, I'll just I mean I will cover the stop, that breakaway gap by my stop loss. Where is my liquidity? So let's go for my liquidity. That is my liquidity, okay? Where I'm going to take my partial, where I should take my partial. Look at this fair value gap. Go and take that partial around that area. Or if you want to take your partial to the entry gap over here, there is another fair value gap around that area. Go and take your partial over there. Whether you are talking about the hindsight. I know, I know. See, this one, this is the entry I have already explained. I just put the sell limit to this fair value gap. Where is my I mean the breakaway gap? I put my breakaway gap around that area. Later I just move it. Okay. So if you see, okay, so that was the entry, and I have already uploaded the entry video to my YouTube channel as well. This was the reason for taking that entry. Okay, this entry, that entry, here, this one, every single entry. Just look over here. That is the entry. Now you can see, I mean, to my video that I took my partial around that area and then I got stopped out over here. I didn't hold it because it was near about the ending of the PM session. I mean, this is the closing of the PM session 4. See this candle. I wasn't, I didn't want to hold it for so long because this is the Friday. Anything can happen. I don't want to hold it. So I will just mark how many handle I got over there. Okay. If I take my entry around that area, if I take my partial around that area, man, only 22 handle, just 22 handle. But just count by two contract, that's for $40. How many handle you are going to get? Now I would love to see, is that a valid entry for the OTE? Okay, so yeah, it actually traded the 50%. Yeah, that's cool. That's cool. In that case, it has made that rules. But in my opinion, I care about the fair value gap. I don't care about the Fibonacci tool. I don't care about that. I don't need to mark the 50%. I need nothing. I'm already in a place where I have all the logic from higher time frame. Why this entry is valid? Because market is rejecting from the new day opening gap. Why that entry was valid? Because market was rejecting from that new day opening gap high. Why this entry was valid? Because market is rejecting from that fair value gap. Why, where was another entry, man? Oh, okay, here. Why that entry is valid? Because that is rejecting from that 15-minute fair value gap. Though it didn't trade that new day opening gap perfectly, but at the same time, I will see it is rejecting from the new day opening gap at the same time. Okay. Why this entry is valid? This buy entry, remember? Here, here. This buy entry. Why this buy entry is valid? Because market is rejecting from higher time frame level. I got the setup on that. I got the setup. I have the very nice market. I mean liquidity. Am I going to market target over there? No, I'm not going to do that. I'm just taking my entry over there. That is my obvious liquidity. If I have two contracts, then I will be brave to hold my second contract until that one. If I have two contracts, I will take a partial around that area. I will hold the rest on until that. Guys, that's actually the ending of Friday price action. You have to let me know that did you get anything. I mean, I saw that 75% of the people actually told me to continue this, so I have actually continued the Friday price action and it's already done. The Friday price action has done. I will start my weekly analysis now, but let me know, do you understand anything from that little discussion? Okay, why you are going to take that entry, why that entry is important, everything. Okay, just let me know. You just write it down. I need that. Okay, I need it, man. To be honest, I need it. Because just a setup, market structure shift, buy side liquidity taken, liquidity, there is a very nice clean sell side liquidity. You are not allowed to take that entry if yet the retracement is not happening from a higher time frame level. Now here I have this new day opening gap. That is why I'm actually marking those. If I don't have that, I will come here to this specific time frame, to this 15-minute chart. I will look for the 15-minute travel gap or water block or maybe other thing. Okay, is that rejecting a level that is more important? See, it is rejecting from a random level. This thing. Okay, look, there is nothing at all. Why it is rejecting from that random level? Because in that area I have this very nice new opening gap. See, it is much more stronger than this 15-minute fair value gap or daily fair value gap or anything else. New day opening gap, new week opening gap. They are so much important. You have to understand. That's why I got some of you actually gave me your chart and told me, brother, I mean, I saw your chart actually, and I get upset. I didn't see not even a single person mark that nude opening gap. Where I have tweeted, my first tweet was, what is the most priority? Okay, that was my first tweet from Friday, and I told that please go for that. What to say, the nude opening gap. That is the most priority. Okay, you can go over there. So, there are so many entries actually. Okay, over here. This was the first. This was the first. Okay. Good morning, friends. And then the second tweet. What is important from today? First priority, I mean. Answer. New day opening gap. Okay. One of the guy actually comment me over there. Wouldn't it be WEN? I really don't know what does it mean. He told that new day opening gap. Are you kidding me? Wouldn't it be WEN? I really don't have any idea what is WEN. I don't know, man. I really don't know what is WEN. I know nothing. I mean, I know everything. No, it's not right. I know something that worked perfectly. So I know new day opening gap. How many entries I have shown here? I have taken all of that entry, all of this here, man, all of this. That was the last entry here. Sorry. Here was another entry here. There was another entry, and actually, I think I take rest of all to my. Let me take actually. I think I took some entry. I don't remember. I took some maybe to my I didn't take it take the screenshot or something, but if you see, I have already uploaded a video, the last entry video. At the end of that video you will see my execution things or the profit I have then just reset my paper trading account. Okay, so okay, the first entry I think I got to my, what to say, the Tradebit account, so far I remember, but I didn't take the before entry. Okay, the first entry I have explained around that area, I didn't take that one because that was just before the news. That is why I wasn't confident about that entry. This entry, that entry, that entry, that entry, everything I took it. So guys, great review, brother. I just got one comment. I think only the Casey Jeff, he got something from me, and rest of all didn't get anything. I'm very sorry to make you disappointed, brother. I'm really sorry. I thought it would be great for you, but when it didn't help you, I'm sorry for that. I tried, man. I tried. Okay, I tried to give you something so that you can get a direction, and that's why I tried. Okay? And I just went outside, and when I came to home, I mean, came my home, I just seen it has 8:35 a.m. New York morning. Since I started the uh, streaming, and just give me some times because I need to just 5 minutes. Okay, I will just drink some water and I will just go to the washroom. I will wash my face. I'm coming back. Okay, just give me 5 minutes. I'm just coming back. I'm sorry for this inconvenience, but I'm coming back. I'm sorry, guys. Welcome back. Sorry for keep you waiting. I'm happy to see that there are some people. I'll be happy to explain the things with them. Okay, guys, the first thing first, whatever I'm doing here, don't take it seriously. Do it you by yourself and try to learn this. Just don't wait here to do it for, to do me it for yourself. No. What is the English word? What is the sentence will be? Don't wait for me to do it for you. Try to learn it, how to do it. That's the important thing, okay? This is the weekly chart from dollar index. This is the first thing. I'm going from the very beginning. You will do it every single week. As I told you, the last week, you have to do it first, then you have to come here and you have to see you are right or, I mean, you have to compare it, okay? So that you will understand how to do it. Let me remove this one. This is the weekly chart from dollar index. What do you see? What price is done over here? Price came here to this last weekly fair value gap. This weekly last fair value gap is important for me. Price came here at the same time. This is the monthly week. So this is a week from monthly chart. This is a monthly chart, okay? This is the monthly chart week. This is the consequent encroachment of the monthly week. What is this week? This is a fair value gap. We see a week as a fair value gap. Nothing else. Just a fair value gap. Who told you this? ICT. Just watch his last streaming. He explained this thing one more time over there. This is a fair value gap. We treat a week as a fair value gap. Market maker or the algorithm, they see the week as a fair value gap. So this is a fair value gap. The consequent encroachment always important. Where price came to this consequent encroachment of that monthly week. So now I am in weekly chart. Market came here to the last weekly fair value gap. Look at the bodies. Where did they close? Just at the level of the weekly fair value gap consequent encroachment. At the same time, it tapped to the monthly fair value gap high and it has traded the monthly week consequent encroachment. It came here. It went higher. Where did it go? To this last fair value gap. Look at this run. See this run? This is the last fair value gap. So from when the run has started, this is the first fair value gap. When market came here, it started to go higher. This is last fair value gap. Is it failed to hold the price? Yeah, it's failed to hold the price. What should be your expectation now? You will expect market will go above. Why above? There is another fair value gap, last fair value gap from that big run. Look at this big run. This is the first fair value gap when this run started. At the same time, when market is going above again, this is the last fair value gap. We will expect market will come here to this fair value gap. After that, we will observe the price. Is the last fair value gap is holding the price or it is going to break so that we can target this buy side liquidity, that buy side liquidity, and finally that buy side liquidity. What is market is going to do after reaching that area? So from the very beginning of 2024 until now, every week so far we are right. Okay, let's say how it will react. From the weekly chart, what do you have here? I have this fair value gap from weekly chart. Last week I was expecting market will reach here. Okay, try to understand. I was expecting from there to that, after that candle, okay, market traded the order block and the mean threshold of the order block. Until now the mean threshold actually holding the price. Let me show you. This is the mean threshold of the weekly chart. So I'm gonna mark it. It is actually holding the price. Nobody closed above the mean threshold of this weekly order block. This is the weekly order block, 50% mean threshold. Nobody closed above the mean threshold. So Until now, it is holding the price. Though it has broken, the last fair value gap is broken. This mean threshold holding the price. Our expectation is it will fail to hold the price and it will reach above those buy side liquidity because that is so clean buy side liquidity. Remember, fair value gap is the most important thing in ICT concept. Nothing is more important than fair value gap. Water block, breaker block, rejection block, proportion block, every single thing depends on fair value gap. Every single thing. Don't believe me, I'm just proving it every single day. Everything depends on the word, I mean fair value gap. So when this fair value gap is broken, I'm expecting this mean threshold will fail to hold the price and send it back toward that fair value gap above those liquidity. That is my expectation. Now, if you ask me, brother, just measure the FIB, I mean 50% premium and discount, please go for that. I don't see the price like that way, but it is not bad to see the price like that way because ICT, even ICT is also look at premium and discount. For me, premium and discount is too hard. I really don't have any idea when and how I have to measure the premium and discount. I have no idea about that. That's why I don't talk about the premium and discount. That means PDRA. I don't talk about them, but it's not bad. If you understand, please go for that. Okay, so in that case, you will see it is actually resides above the 50%. I guess let me actually show it. So the thing from here to here. So this is the 50%. Above the 50%, there is the buy side liquidity, and this is in a deep premium. So market will reach there, then it will fall, or we will observe the price. But I really have no idea when and how we should use this PDRA. I am explaining this every single day, so please don't get me wrong. This is the mean threshold. This is the opening of the candle. That is my water block. This is the mean threshold. It is holding the price. Two things can happen. Either market will reach lower toward that fair value gap. See, there is a fair value gap that is open. That is open. So this mean threshold can hold the price and send it back to that fair value gap, or it will fail and take that liquidity and it will trade that fair value gap. If you ask me, I want to see this mean threshold will fail to hold the price, take that liquidity, it will trade that fair value gap before coming here. If it can keep it open like that way, that means it is extremely bullish. Am I sure, 100% sure it is going higher? No, I'm not 100% sure. What should I wait for? I should wait for the price action. Monday narrative, Tuesday narrative, Wednesday and Thursday expansion narrative, Friday reverse into the range. Okay, that's all I'm waiting. If I see in Tuesday it went higher, failed to reach around that area, instead of that it has taken little liquidity below that buy side liquidity. In Wednesday and Thursday I will expectation, my expectation is lower run. If I see in Tuesday it has taken some kind of liquidity around that area from the sell side liquidity, I will expect Wednesday and Thursday higher reaction. Okay, every single thing can be changed by Sunday open. Sunday open is very important. Everything can be changed. Now I have two level. Here is one level. Here is another level. I have two fair value gap. Okay. If you ask me where it is going, nobody can tell you where it is going, but you have to expect where it can go. Right now, it is very near to that buy side liquidity. I have this fair value gap which failed to hold the price. Now that is more obvious for me. I'm expecting market will reach over there. But if it want to go lower, I'm no one to tell that no brother you can't go low and take that fair value gap. No, you can't do. I mean, I'm not like that, or I'm not even a market maker. I'm nothing. I can just expect what will happen. So my expectation is it will take that buy side liquidity this week and it will trade that fair value gap. Now I'm going to daily chart. Now I am in daily chart. If you remember, last week I was expecting price will come here to this daily volume balance. That was my expectation. It has to reach around that area. Then if it would love to go higher, I will see that later. Okay, or if it failed to hold it, then this will be my target. Where price came just above this volume balance. Okay, this is not so important according to ICT. He told that volume balance is the weakest on above I mean among all his PTRA. So I will accept that. Okay, it actually failed to trade that volume balance, but it has traded this fair value gap, this daily fair value gap. What is this daily fair value gap? Market has taken the liquidity, market structure shift, first fair value gap, breakaway gap. Price came to this first fair value gap where it should reach to that buy side liquidity. Look at this buy side liquidity, very clean buy side liquidity here, very clean buy side liquidity. Above that I have this daily last fair value gap. At the same time, this is the weekly fair value gap. My expectation is price will come here and it will take that buy side liquidity this week. When I will change my direction, if I see price close below this low with a displacement, okay, something boom. If I see this, then I will start to think, okay, maybe market is coming toward that weekly fair value gap. This is the weekly fair value gap, if you remember. Right now, gun to my head, I would love to see this buy side liquidity will be taken. That is my expectation. Let's go to 1 hour chart. If you come to this 1 hour chart, from the 1 hour chart, you will see this low and that low. Okay, one. This low and that low, they are relatively equal lows. Where price is right now, just right now, it is in that fair value gap. Okay, very near to this fair value gap. What is that fair value gap? Market has taken the buy side liquidity, market structure shift, first fair value gap, breakaway gap. Price should come to this first fair value gap. It can reach lower toward that liquidity. See this sell side liquidity? It can come here to that liquidity. What do I have below this liquidity? Come to this weekly chart one more time. Mark this week's consequent encroachment. Why that one is important, brother? Why it is important? Because this is only fair value gap I have around that area. So this is the consequent encroachment from weekly chart. Okay, so I'm gonna remove this one and I'm going to keep that consequent encroachment to my chart. Coming back to hourly chart, you can see market came here to that weekly chart. Very nice way, very nice way. It just tapped here, boom, it went higher to that consequent encroachment. Anybody has any confusion about that? See how beautifully it has traded over there. That was the reason not to trade that volume balance. See, this is the volume balance from daily chart. It failed to reach over there, but it has reached to that specific fair value gap consequent encroachment. Weekly chart, that week is fair value gap. Remember guys, it came here perfectly, went higher. It can go lower. If it come here, go low. What do I have around that area? I have this water block. This is another water block, mean threshold. Obviously it can reach until that mean threshold. When I will see that market is going lower, when this low will be broken, when this low, remember from daily chart, that swing, that miss, that daily fair value in volume balance, this is that swing. Okay, it failed to trade that volume balance. I'm talking about this swing from daily chart. This is daily chart. This swing failed to trade that volume balance. So if I see market started, it's just falling. Okay, falling, and it has traded that low with a very nice displacement. Then I will start to think, okay, market is actually coming toward that lower fair value gap. Really, I don't want to. I don't want to actually see that. Okay, this is an fair value gap above the breakaway gap. 1 hourly chart. Would we consider that as a breakaway gap? If you are talking about here, this is our entry gap. Okay, just let me show it to you. This is our entry gap. This is our breakaway gap. See this candle low and this candle high. This is the breakaway gap where market tap to this entry gap. Okay, it just tapped over there. What should it do? It should go low and it should take that sell side liquidity. That is my expectation. That market will take that sell side liquidity first, then it will expand higher. Now If market I see this fair value gap fail to hold the price, just for example, now it didn't go lower, it didn't take that sell side liquidity. At the same time, it has traded this fair value gap hourly from hourly chart. That is the fair value gap from hourly chart to that specific one. If I see it's broken, then I will go for that buy side liquidity. Okay, that high, swing high, and finally this buy side liquidity from weekly chart, from daily chart. If I see it's broken, same here. If I see it's traded and this volume balance failed to hold the price, then this is my target. That weekly fair value gap is my target. So you have to understand why price is doing that, when price is doing that. There is more opportunity to get the expansion in Wednesday and Thursday. Most of the time, 95% of the time, you will get the big run or expansion in Wednesday and Thursday. Okay, most of the time. Rest of the day, you will see accumulation, manipulation, and reverse. Okay, you will see that. But Wednesday and Thursday, you will get only expansion most of the time, not always. Okay, guys. So that is the I mean, if Rahul, if you are talking about this, so that is the breakaway gap, that is the entry gap. If I see it's broken, my target will be this buy side liquidity. If I come to 15-minute chart, from 15-minute chart, you can see this high and that high. They are relatively equal highs. Above that, actually, where price reach to that 15-minute last fair value gap. See, that is the big run. Okay, this was the last fair value gap from 15-minute chart. Where market reach? Where did it reach? Can you see it? The 15-minute last fair value gap. Anybody has any confusion about that? It came here, it just tapped over there. It has taken that high, at the same time it has made relatively equal highs. So that is the buy side liquidity. When I was in hourly chart, you see this thing, this buy side liquidity line. That line I got from 15-minute chart. Okay. So at the same time there was hourly fair value gap as well. But if you see from 15-minute chart, I love 15-minute chart, man. I love it. Okay. Just look at this 15-minute last fair value gap. Price tapped over there. Boom. Just fall. Look at this fall. How beautiful the fall is. Okay. Over here, where price reach to this fair value gap, 15-minute last fair value gap. Why not this fair value gap? Because this is the entry gap. I mean, depending on the entry setup, it has taken the liquidity. This gap resides below the liquidity. I don't care about that gap until now. When this will be broken, then I will start to count that gap as with importance. Okay, but this run, look at this run. Why did it came to this 15-minute fair value gap? Brother, why it come here? Now this is a very random level. Why price came here? Where the body closed? Look at the bodies. Why it has closed around that area? What is important over there? There is my order block. Look at this order block here. This one. Okay, I just marked the hourly order block. But if you'd love to see it from 15-minute chart, this is our hourly order block. Okay, why this one is order block? Because this is a retracement level to this fair value gap. After making that setup, market has taken sell side liquidity, market structure shift. This is the fair value gap. Price came to this fair value gap. Boom. When market came back again, where did it came? To this order block. See that specific order block. It came here from 15-minute chart. Just from 15-minute chart, it has traded that order block. Or if you just mark the consequent encroachment of the last fair value gap, you can mark them and mark it as well. There is nothing wrong with that. But dollar index, I don't expect perfection. I don't expect it. Okay. Now from here, just look at the setup. It has taken the liquidity, market structure shift, fair value gap. Price came here, it went higher. Where did it came? To this fair value gap. Now if it can hold the price, this 15-minute fair value gap can hold the price, market has more possibility to come here, take that sell side liquidity. If it fail, this is more obvious buy side liquidity. See, this high and that high is relatively equal highs, so it has the more chance to take that buy side liquidity. Okay, at the same time I will watch that hourly fair value gap as well. I don't need the perfection, but I will get an idea from here why dollar index is important. Because if you can understand where dollar is expanding, okay, if you see it is expanding higher, then you will expect Nasdaq, even S&P will go lower. If you see actually this fair value gap is holding the price, market is falling. Okay, it is falling. What does it mean? Nasdaq will go up, 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 something like that. All I want to say, it will expand higher, not lower. It will expand higher. That is my expectation from dollar. It's done with dollar. Now come to this Nasdaq. I didn't see the price. I am just seeing the price with you. Okay. So I didn't do my homework yet. So I'm doing it with all of you guys. All of you. You have to do it like that way. This is the way you will do. Okay. After analyzing this chart, I will tell you what should you look for next. Then I will explain everything step by step today. Okay. It's gonna be a little longer streaming for today. Now look at this price action. What is this? That is all-time high. All-time high. I can't say you there is no information here. Why price reached and why it is it is coming back. I have no idea. There is no information because this is the all-time high. Now market can reach to the star, to the moon, okay, to the to another planet to meet with alien. Don't get me wrong. I have no idea how long it will go up. Man, price is falling. No, I don't think so. I don't think so. It's falling. Yeah, obviously it can fall. I'll be sure when I'll be sure that this is the all-time high now. When I will see this water block and the mean threshold is broken. When I will see both of the level is broken, then I will say, okay, this relatively equal lows, this low and that low. They are relatively equal lows. That is going to be target. After that, this low is going to be target. And finally, this weekly fair value gap. Why this weekly fair value gap is important? Market has taken the liquidity, market structure shift. This is the first fair value gap. This is the breakaway gap. See, this is the breakaway gap. Price should come back again to this first fair value gap. If it would love to go higher, it should come here, then it should expand higher. Or if it failed, market can reach until the breakaway gap, once again encroachment, then expand higher. If I see this one is also broken, then I'm fully sure, okay, this is the all-time high for next couple of years. I'm going lower. I'm going lower. Let's look for the liquidity around that area. Where is my liquidity? Where is my liquidity? I'll look for the liquidity then. Until here, I'm expecting market will go high. Now, how long it will go high and how it will go high? See this fair value gap, there is a fair value gap as well. This candle low, this candle high. The very next week, okay, market can expand little lower to that fair value gap, then it can expand higher again. How how long it will go high? Nobody knows. Simply, if anyone tell you, if someone just use the expansion tool, okay, so this is the low, this is the high, and they will use this, sorry, use the standard deviation, okay. I have the projection, man. This is the one. The market is coming here, here, maybe here. Every single person is actually lying to you. Nobody can, not even a single person can expect or can predict the higher run. Nobody, simply nobody. Okay. So far, I'm expecting lower run because I see the 0.5% is reacting. I'm expecting little lower run this week. I would love to see some kind of lower run, at least until the water block or maybe the mean threshold. Maybe it will come to this mean threshold, water block mean threshold or the consequent encroachment of that fair value. I am expecting some kind of lower run, but I am not telling, okay, market has changed the bias. See the bull market every single week except this one, except this single week, every week is bull, every single week is bull. So I'm not telling that market is actually reversing now. No, I'm not telling that. Not even I'm expecting. I'm expecting bull run. It will continue to go high. It will continue to go high. That is my expectation. But market need to take some retracement. That retracement is my expectation from coming week. I'll come to this daily chart now. So from daily chart, you can see market has taken the liquidity. See, look over here. It has taken the liquidity. Market structure shift. Where is your first fair value gap? This is your first fair value gap. Where is your breakaway gap? This is your breakaway gap. Where should you expect the entry? To the first fair value gap. Where your stop loss will be covered? The breakaway gap. Market can reach until the breakaway gap, but body can't close below the consequent encroachment. That is the rule. We can go little bit lower of that breakaway gap. Sometimes it will act as a breakaway gap. Sometimes it will fail to act as a breakaway gap. That is why I told that I want to see the body where it closed. Did it close below the consequent encroachment? Yeah, consequent encroachment of the breakaway gap. If I see that, then I get, if I am already in a trade, I try to kill it. Even if whenever it will reach to my entry point, I'll just try to kill it, because I got no precision from the price. That is why I tell you, look at the bodies. What did it close? Below the breakaway gap, constant encroachment? No, it closed here, so it's gonna high. Then brother, why it came here? Obviously price can come to the breakaway gap. This is the entry gap. Okay, I didn't mark it to my chart. Just look at this setup. Market has taken liquidity, market structure shape, first fair value gap, breakaway gap. When price come here, boom, little retracement, boom. Right now price is here, all time high. Look at this fair value gap. This fair value gap is the last fair value gap to that run. See this run? This is the last fair value gap. Let me mark it. What do I have in that area as well? A weekly order block. Very nice weekly order block. Below this, what do I have? Relatively equal lows, and also this last fair value gap. From this run, this is a run consolidation. This is a run. Every single run has a last fair value gap. So in that run, this is the last fair value gap. From here to here, this big run has another last fair value gap. I want to see market will reach here to this order block level. Okay, at least it will come here. Okay, if I see actually it came little bit lower, maybe to the consequent encroachment of this fair value gap. Why this fair value gap is important? Market has taken some liquidity here. Again, market has taken liquidity, market structure shift, entry gap, breakaway gap. Market came to the entry gap, boom. How do I know that market is going higher? If I see body close above that high, I need a body close from daily chart. If I see that, oh man, it is actually going toward the star. I have no idea how long it will go, when it will stop, when it will reverse. Nobody knows. Not even ICT. Nobody. Simply nobody knows where it is going. How do I know that it is actually going higher except this? I will observe the dollar index. Is dollar index going lower? If I see dollar index is going lower, that means it is going higher. If I say no, dollar index is telling me no, I don't want to go low, I would love to go high, there is much more possibility that is the highest high, all time high for next couple of years maybe. So it's actually going lower. Everything is related. Dollar index, Nasdaq, both of them are related. You have to expect the way price will tell you to expect. You can't just force market to give you a lower run. If just you just can't say that okay, market has to come here, so next month market is coming here. No, you can't do it. If you do it, you will take continuously the losing trade continuously. Okay, you have to react with the price. Sound clear, boss? Thank you, Akhtaruজ্জামান. Can you can hear you, but okay, why it is over there? Oh, okay. Nobody actually write down anything. I was thinking you guys actually write down something, but as my viewers, either they don't understand anything or they understand everything I told. Okay, I am confused now because nobody asked me no question. Everyone is quiet. They're just sitting over there. Guys, today's streaming is going to be little longer. Okay, so get ready for that. So many things coming. Don't don't get bored. So right now, if you tell me what I am expecting, I'm expecting market will reach at least to this fair value gap, daily fair value gap. Okay, but I will observe when it will reach to the consequent encroachment of that first fair value gap. 50% of that fair value gap, I will see how much react around that area. Now, is it going to fall? Boom? No. Same thing as I told you last week. Accumulation from the Monday, manipulation from Tuesday, expansion from Wednesday if it is low, and I mean that is expansion in Wednesday, continuation of the expansion in Thursday, Friday reverse. That is my expectation. It should happen. And I mean another thing can happen. What is that? In Monday, that should be the accumulation. So this is the accumulation. In Tuesday, manipulation. Wednesday, expansion. Thursday, continuation of the expansion. Friday, market will reach to the weekly range. It can happen as well. I will see how price react. If it is going lower, you have to mark every single day's narrative, how it is working actually in Monday. Do I get any accumulation in Monday? Yeah, I got it. Now look at the Tuesday manipulation. Where the manipulation happened? Upper side or lower side? If you say upper side, that is a sign. Okay, maybe Wednesday expansion will go low. Maybe, okay, not 100%. If you get a lower expansion in Thursday, you will expect that should be the continuation of the expansion. That means a little retracement, then again boom. Friday, it is coming back in the weekly range. At the same time, you will go to your 15-minute chart and you will see how every retracement is happening. Is that happening from a 15-minute fair value gap? I mean the important fair value gap, okay, either the first fair value gap or the entry gap. Anything is happening from 15-minute fair value gap or not? If you see the retracement is happening from a random level, don't do anything. Just don't do anything. As I explained my first 1 hour explaining the Friday price action. Just in Friday price action, there was near about 8 or 9 entries. Okay, all of them were profitable. All of them. I explained it. I showed you that that is not hindsight. Okay, I was just trading over there. I mean alone. Okay, because I didn't came here in front of you all guys. Sometimes I should leave you alone. That's why I actually did it intentionally. So every single day you have to expect the price. The way price will give you the direction. I'm speechless. Okay, okay, see. Don't be speechless, brother. Now I'm coming to on our chart. Okay. So I have already explained the last parallel gap, why I marked it from hourly chart, because from 15-minute chart price was messy. That was the entry gap. That was the breakaway gap. Price came here, take that liquidity, more obvious liquidity. Okay. After that price retraced, little bit retraced over there. Then look, all of you guys ask me where is the water block, man. This is my water block. See this plain order block. No man, this is not water block. Market is not going over there to trade that water block. Market is trading water block here. Where is your water block? What is the level around that area? This is favorite for me. Okay, this one is favorite for me. The opening of the last down close candle after the retracement. This is my water block. Obviously the wick of that candle, see that candle wick, that is also the water block level. So the water block level start from there until here. This is the water block level. I am interested when price will reach here, then I am interested, then I will mark the mean threshold of the water block as well. Why this two candle is water block? Now this is consecutive order block. That means there is two candle. If you see 5 candle in a row, this 5 candle will be your order block. Look, one candle, then black candle, one candle, then black candle, then two candle. That's why I have two consecutive order block. If it was also a green candle, then from here will be the order block. I will just mark another order block, consecutive order block level. This is the opening of the consecutive order block level, and this one is also order block level. After the retracement, I missed my entry, okay, depending on the order block. But look what price did. It has taken this liquidity, okay. After taking the liquidity, where did it retrace? Can you see this? This is the order block. Now it missed to reach until that. Until then, I mean that level, it missed to go over there. But see, it traded the order block. This time it is not coming here to trade fair value gap. This time it is coming here to trade water block. After the water block, what is my expectation? My expectation is it will leave some area open. This to that. It will reach that area open. Okay. If I see it's open, I'm pretty much sure it is going to take more liquidity. Where is more liquidity? This is my more liquidity. Okay. Because all of these lows has taken by that run. And though there is nobody, as there is nobody, I'm just marking this as a shallow run. So that is my liquidity now. But brother, you are wrong. It failed to trade that liquidity level. It failed, man. So you are wrong. Absolutely, I'm wrong. There is nothing wrong with that. What do you think? To that specific run, how many trade can I take? How many trade can I take by that specific run, small run from a hourly chart? Just think about that. Okay, how many trade can I take? How many handle can I get? But this is the way to mark the order block. I don't want to spread the misconcept, because ICT so many times ICT warned people not to use water block theory. Actually, he used the water block specifically. Okay, don't spread my water block in a wrong way. That's why I don't actually talk about the water block. But whatever I told, whenever ICT will mark the water block, just think, okay, he is going to mark that on, or what he is doing after taking the liquidity market structure shift. First fair value gap has traded, then the down close candle, okay, with the displacement. Is that sorry, up close candle, is he marking that on as a water block, or is he marking that on as a water block? What he is actually telling. See, if I just would love to show you here how perfectly it has traded that opening. How perfectly. This is not a water block, man. This is not the reason market came here. If I go to the lower time frame, I will show you there is some other level that is more important from the lower time frame. That's why price reached over there. Remember, price is fractal. So from 1 second chart, everything is important. From higher time frame, you will see a wick. From lower time frame, you will see a whole price action over there. This is hourly chart. So if you go 1 minute chart, you will get a whole price action around that area from 1 minute chart. If you go to second chart, more thing will be there. Okay, it didn't trade that water block. The water block trade has happened here. This is the water block level traded here, exactly here. Now this is a little confusing. I don't want to make you confused. That's why I stopped talking about the water block. But whatever I'm telling you, this is my experience. I know when water block actually work perfectly. That's why I took the second entry. If you remember, after taking the buy, why it's not the water block? Rahul, I have already explained. This is not water block because this place we are not looking for water block. This place we are looking for fair value gap. This is the level where we should look for the water fair value gap every single time. This is the level where we should look for a fair value gap. Okay, it came here now. In a hindsight, very clean that okay, market has traded that water block and it has changed the delivery. It's very simple. But if it happens sometimes, I don't think that is a rule. If it happens always, that should be the rule. Always means 95 or 96%, 98% of the time, then that's the rule. Okay, yeah, Rahul, I got it. I explained it, and no problem. If you ask me the question, except the water block, I will clean everything. Okay, but as it is about water block, so I'm not going to deep discussion. I'm just telling you. If you see over here, okay, you can see it has traded this water block very perfectly, and you can think, okay, this is the water block. Go to your chart, look more previous price action, and see how many times you will get that. How many times? If I just go to 1 minute chart, from 1 minute chart, same thing, right? That should be fractal. So from 1 minute chart, if I come here, prices taken, liquidity, market structure shift, that should be the water block. Why market didn't trade over there? Why it didn't trade over there? This is the retracement. Okay, retracement, then boom. After the retracement, I'm gonna mark the water block. I'm just going to mark the water block. Look, do I get water block trade? Boom, I got it. Okay, let it go, brother. Let it go. Doesn't work like that way. Where is the another one? Just let me find it. Actually, I did. Okay, over here. This is the market structure shift. Look over here. This is the market structure shift. Now this time did it trade? No, it didn't. Okay, let me show it to you. Just this is your market. For example, okay, this is your market is not that one actually. This one. This is your market structure shift. This is your fair value gap. This is the water block high. Okay, this is the water block high. It traded that level this time. Okay, it perfectly it has traded this time. I'm lucky, that worked perfectly. But after the retracement, this is the water block level. This down close candle is my water block level. Price come here to that water block level, see the boom. I'll show you more. Okay, don't worry. mm, okay. If I can get one more, if I can get one more. Is the retracement? No, no retracement here. I mean, guys, it's very difficult to find something from the chart and show it to you, because if I don't get it in live, it's very difficult for me to find some hindsight. Okay, but just go your chart and look for the thing I told you. Just look for that thing. Okay, how many times? Just count it. How many times this candle react as a water block, and how many times after this? Okay, after the retracement, the water block works how many times? Just look at that. You will get, I mean, just count it and you will get the what to say, the clarification, right, brother. Okay. So what I was talking about, I already forget actually. Oh, I was talking about the direction. Okay, right now I can see this is my liquidity. Below this liquidity I have this parabolic gap. Finally this parabolic gap from the daily chart. If you remember, this is the daily chart. Yeah, I don't have any clean liquidity around that area, nothing except all of this consolidation. Okay, except this liquidity I have nothing on my chart. No price action, nothing, no sell side liquidity, no buy side liquidity. I will go for that low, but I'm not sure, okay, what market is going to happen or what is going to do. I am not clear. I'm not sure about that. All I need to see how it reacts. So far, I'm expecting lower run until here. But to this lower time frame, look, no clean sell side liquidity. Last day when I marked that liquidity, that low and that low, how clean was that? How clean the setup was? But look over here. Do you see any clean sell side liquidity? I don't see. I don't see any clean liquidity. Then really I have no idea where market is doing and what it is going to do. If you come to this 15-minute chart, I have this little liquidity here, this liquidity level above the market, nothing. I have nothing at all right now. I'm expecting price will take that sell side liquid. Then I need some kind of news. What type of news I need? CPI. Why I need that CPI? Because most of the time market actually give us a big run using CPI news. Okay, so while I need to see, I have to uh, look over here when I can get the CPI. When I will get the CPI, I will start to think where market is actually going. Right now market is at the level where we have nothing. Nothing, nobody can tell you where market is going right now. In a short term we can do a scalp by depending on the fair value gap and the 15-minute fair value gap. I mean, not sorry, depending on the fair value, depending on the liquidity and the 15-minute fair value gap. Yeah, obviously we can trade, we can do so many scalping, but for longer bias, oh man, it's really difficult. But so far as I told you, from this daily chart, this liquidity, this fair value gap consequent encroachment, and this fair value gap, this water block weekly water block chart, and this mean threshold from the weekly order block. All of this level is my interest, because above I have no idea, no price action, nothing. Below I have something. Okay, I have something. So I can expect market will come here, but I'm not sure what market is going to do. Okay. Crystal Kiss, good morning. I'm Sarah and have been watching all your videos. Welcome, Sarah. So you are saying there is no liquidity because it has been taken out all the buy side above the market, okay, this is all time high. I mean, in Nasdaq this is the first time or the highest high in its life. So before I have no price action, so I have no idea how long it will go, but below the price recent right now the market is here. So below the market I have some level, so I can expect market can reach here, I can expect that. Okay, or to the consequent encroachment of this fair value gap, it will reach here, I can expect. But if market would love to go higher, whenever I will see body close above that high, I will start to think, okay, market is actually going toward the star or moon. okay, or maybe another planet, another world. I have no idea how long it will expand, how long it will go. We can measure it little bit using our dollar index, but to be honest, if you ask me, I would love to see lower run. I want to see this is the all-time high. That should keep like that way. That is my expectation. But that is my expectation. Okay, I'm not telling it's going to happen. That is my expectation. When I will be sure that it is going to happen, when actually market will break. If you remember, there was a weekly fair value gap, entry gap, and the weekly breakaway gap here. When I will see market will break these two fair value gap, then after that I'll be sure, okay, our trend has changed now, so market is now going to fall. I will look for all of the liquidity around that area because market is going to fall now. Until then, I'm bullish. Market should go high from weekly chart. From daily chart, I will observe market will reach until here, then how it reacts. I want to see it will go, I mean, it will at least come here, okay? After that, it will go higher. But at the same time, don't forget to mark the constant encroachment of that fair value gap. I'm not going to mark it because I'm gonna remove all of this level from my chart. I would love to make it more cleaner, okay? My chart should be more clean. Otherwise, I get confused by all of this run because I have some lower time frame thing on my chart. I would love to keep them, okay, comparing with all the higher time frames. So I love to keep the sell side liquidity, only the new day opening gap or new week opening gap, and from 9:30 to 10 the opening gap. That's all. I would love to keep it on my chart. Nothing else, okay? Not the high time frame mean threshold level or high time frame fair value gap, nothing. And I always use this thing, okay, every single time. I have this 15-minute and this 1 minute chart. I just need this two time frame. As I told, I mean, if you remember, I have uploaded this one. If you guys would love to just spend some time, I'll be grateful to all of you guys. Actually, I have uploaded yesterday what actually ICT told about 15-minute fair value gap. This is his bellwether. Okay, he can do thing by 15 fair value gap. And when the first time in 2022, when I have heard that part from, you see, ICT mentorship, sorry, ICT 22 ICT mentorship episode 10. Okay, in episode 10 he talked about the bellwether, about the 15-minute chart. So that was the first time I heard about the 15-minute chart, and I started to think why 15-minute chart is so important. And later I worked on 15-minute chart most of my time. Okay, most of my time I worked on 15-minute chart, and now it's kind of a, a time frame. If you just tell me, brother, just I will give you only 15-minute chart and 1 minute chart. That's enough for me. I don't need anything else. Nothing at all. Just these two pair. I mean, these two time frame. I can do anything. I can do everything by that two time frame. Okay. That's why I told you guys, don't force the market. Don't just keep changing the time frame. 5 minute, 4 minute, 3 minute, 2 minute, 15 minute, 1 hour, 4 hour, daily, weekly, month. Don't just keep doing that. Try to stick on one time frame. Okay. If you, I'm not telling you please go for 15-minute chart. I'm not telling that. If you like 1 hour chart, please stay over there. If you like 4 hour chart, stay over there. I have already explained when and how it is going to help you and when and how it is going to hurt you. So it's up to you what you want to do, but it's all about you. Okay, I would love to come in. uh, this is actually mini S&P, and you can see this all-time high. This is the weekly fair value gap. Price came here, it went higher. From daily chart, see this very little fair value gap over there, very little fair value gap around that area. Okay, yes, I follow you on Twitter. Thank you. No problem, Sarah. So this is the fair value gap from weekly chart. I would love to see it will come back again to this fair value gap. That is my expectation because this is the order block. Maybe market is coming to that order block and the mean threshold. Okay, I'm not sure. I'm not sure. Okay, uh like the last week, as I told you, market is coming toward that. I mean, market is going to take that high. remember, if you remember the last Sunday when I was doing the weekly analysis, I was telling you market is going to take that buy sell with so many confidence. And dollar index, okay, it is going toward that daily volume balance. It has to go over there. So something like that. But right now, where price is right now, here, I have no idea what is going to happen. Nobody can expect something. If anyone tell you market is going higher, he's lying. If anyone tell you market is going lower, he's lying. Because nobody knows what is going to happen. If I come to daily chart, why is it important for you nude opening gap or even other day nude opening gap? Thank you for all information that you offer us. Elena, I think you were little late. Okay, you have to watch the first part when I explained the Friday price action. Okay, because I spent almost 1 hour to explain about the nude opening gap and how it react, how when and how I use the nude opening gap. Every single thing I actually explained already, and I took near about 1 hour to explain that. So I guess you have to spend little time over there. I'm sorry because I don't want to repeat that. Okay, just watch the first part of today's streaming. You will get both Friday entries. I have explained all the entries. Near about 7, 8 entries was in Friday. All of them were profitable. I mean, it worked perfectly. Same rules, same everything. So please watch that part, the first part, and then I guess everything will be clear. Thanks for asking. I mean, thanks for asking the question. Hello, brother. Long time. How are you? I'm fine, man. Yeah, it's been long. I mean, you just I didn't see your name, man. Shahid, how are you, brother? Okay, so I enrolled late. I review all video. Okay, not all video. Actually, this video. Okay, I mean this is streaming. The first part of this is streaming. I have explained the nude opening gap, how to use that nude opening gap, when you will use that nude opening gap, how you frame your trade depending on the nude opening gap. Every single thing I explained. The first part of this is streaming. Okay, so this is the mini S&P daily chart. Yeah, look at the price action. Who can tell you where market is going? This is all time high. All time high. Yeah, you can say there is a fair value gap that can be traded. Okay, that can be traded. No clean sell side liquidity except this sell side liquidity. That is very clean sell side liquidity around that area. When it can come here, if you see this last daily fair value gap, this is the daily fair value gap from that run. Okay, why this is the last fair value gap? There is another fair value gap around that area as well. Why you are not liking that fair value gap? This is my entry gap from daily chart. This is my entry gap. Market has taken liquidity, market structure shift. This is the entry gap, that is the breakaway gap. I would love to see it is broken first. When it is broken, I will get another range here. If it is also broken, then only then this sell side liquidity is obvious. Okay. Uh, Hi brother, hope you're doing good. I'm fine, Dolfo. How are you, brother? I'm cool, man. I'm actually cool. I'm a little excited actually. So that's the long-term plan, but right now I would love to see it will reach at least to this daily fair value gap. At least, okay. From weekly chart, you can see this is that weekly fair value gap. Let me actually mark it. That will be easier. So this is the weekly fair value gap. If you come to daily chart, you see this is the daily fair value gap. So weekly fair value gap and daily fair value gap, they are aligned in a same level at the same time. Now, it is not high probability, but I will tell you that market has taken liquidity, market structure shift. This is the fair value gap where market should reach. Below this fair value gap, there is the breakaway gap around that area. Same logic, every single place. Same logic, man. It should reach here, okay? I want to see it will come here. Then, if it want to go higher, we will decide later, okay? I stay with all of you guys in my Twitter. Next week, actually, I mean the tomorrow, the day after tomorrow, in Tuesday. In Tuesday, I won't be here, so I won't be in front of my market, but I will try to come back in Wednesday. I guess you guys will understand the fact here. You have to we as we don't have the daily bias, that doesn't mean we can't trade. Trading, scalping, and having bias totally different. That's different, man. If you have the bias and if you know the narrative, how to expect the price action from that specific day, trading is like drinking water. It's nothing. You have to believe it, man. You have to believe it. How can I mark something in beforehand? In Twitter, all of you guys, I'm no one, where nobody knows about me. Still, I'm marking some level and it's working every single day. How? Because I just know how it works. I don't need the PhD level. Okay. Oh man, I have to know what is order block, what is breaker block, what is the fair value gap, what is inversion fair value gap, then what is market maker X model, turtle soup, bread and butter, optimal trade entry, then silver bullet, what else, what else, what else? Unicorn model. No man, I don't need all of them. I just need a simple thing that works most of the time. That's all for me. Just that's all for me. I don't need anything else. It's up to you. How do you want to learn? If you want to PhD on the market, I'm not telling you not to do that. But if you want to earn from this market, you don't need the PhD level. I say what ICT told that one of his student actually sent him 150-page rule book. Okay, one of ICT's student, he has just mailed him 150 pages book. Oh man, are you kidding me? 150 pages rule. Can you keep them remember or can you use them when you are trading in 1 minute chart with that little moment? Can you recognize all of these things? It's impossible. Totally impossible. Then ICT told my rule books is like one business card. I can write down my rule on a business card. That's the thing I am just explaining here. I'm just giving you the last pair lookup, how to use that last pair lookup and the entry gap. Just two things. Strict on that, be profitable. You don't need the PhD. Every single day, at least you will get 2 entries. At least. If you ask me, I can get 5 to 10 entries. Last day, one of my brother actually asked me, brother, how many trades we can take? I told him, brother, we can take minimum 10 to 15 trade in one day. Okay. After telling that, that was almost PM session. If Remy is here, Remedius is here, please let me know if I am just telling you, I mean telling lie or is it truth. Okay, if Remedius is here, just let them know that am I lying or am I saying the truth. I told him that was at the noon hour, or I mean 12. After that, I took 8 entries. All of them, I mean, within 8 entries, there was all of them were on my paper entry because I took 2 entry in the morning session to my what to say the paper the trade of it account. Both of them were stopped out to the break even. Okay, both of them are stopped out to the break even because I targeted more and I didn't take the partial because I had no way to take the partial. I had one contract. I was unable to take partial and then it come back again and it stopped me out to the break even. So I decided not to take entries to my trade over account and then I just let it go the whole day in Friday. Then I started to trade in my paper trade account. I have shown you the thing to my Twitter as well, how many trades I took and how many was profitable. If you come here, so I did this. Okay, I took eight or nine. I don't remember exactly. Every single one was profitable. So it is really possible by using one concept, a very small groups. I have no idea why people actually force me. Even some of you actually tweet me. I mean, not tweet. Actually, messaged me to my Twitter. Brother, teach us that. Teach us those. Why do you need that? I'm just giving you the easiest one. Whatever I'm telling you here, that is the easiest one. Just try to focus on that 1 month. Just spend 1 month and then come back to me. Is it working or not? If I come here to this 15-minute chart, let me show you. Okay, why did it close? It is the new day opening gap. Why it is important? I have already explained at the beginning of my video today's streaming. I have explained it. Okay, now where did it close? Why did it close? As there is so many people, so let me actually show it one more time. What is this? This is 15-minute time frame. Okay, this is 15-minute time frame. What is this? To that big run. What is this? This is the last fair value gap, right? Now look over here to my left here. Okay, here Just look at that L and the number. Just look over here. What is the low of that candle? 17496.75. Now look at this candle. Where did it came? 17496.75. Is that tick to tick? Tick to tick. It just came to the last fair value gap, man. Just just to the last fair value gap. Why you are confused? Only two fair value gap. I just told you. After taking the liquidity market structure shift, this is the entry gap. That is important, very important. This entry gap is very important. Look over here. It has taken the liquidity market structure. Just look, mark this one as your market structure shift. So after shifting market structure from 15-minute chart, this is your first fair value gap. Then what should it be? It should be breakaway gap. Market should not come here. If it come here, no problem. Body can't close below the mean threshold. I mean consequent encroachment of this fair value gap. If it fail, then this sell liquidity is obvious. If it fail to hold the price, then this liquidity is more obvious. Try to understand, man. Then which fair value gap is important? The first fair value gap, that is the entry gap. This is your entry gap. But brother, if there is so many other fair value gap, what will we do? We will just skip all of them. Why? Because they are not even a fair value gap. You don't know what is fair value gap. You don't know why this is fair value gap. What is fair value gap? There's three words: FAIR. Then, sorry. Just give me a second. FAIR, fair. Okay. Now VALUE, value, and I have learned it with so much, what to say. I struggled to learn it, man. I struggled. Nobody was there to ask me the question. See, this is three word. Okay, every single person. Have you ever asked to yourself why it is called fair value gap? Okay, my English is not good, but your English is so good. You guys are so brilliant, and you know better English comparing with me. Now, what is fair? There should the opposite word of fair is unfair. What is value? Everything has a value, right? Like if I go to a shop and I mean if I just tell the shopkeeper, please give me 1 kilo apple, okay? He will ask money. That means that apple has the value for maybe $10. So if I pay him $10, he will give me one kilo apple. That means that 1 kilo apple value is $10. So that is value. And gap, this is gap. Every gap is not fair value gap. There is some gap, they are actually just gap, just a gap. There are some gap like this has a value. Okay, I mean, sorry, not that one. This is a value gap. This gap has a value. This is not a fair value gap. What is fair value gap? This is a fair value gap. This is the fair value gap, the last gap, the breakaway gap, the this gap. This is the fair value gap. This is just a value. This gap has a just value, not fair value. This is unfair. Okay, I mean, I have no idea how can I explain this in English word. Just ask yourself, every single gap has a value? No, man. There are some gaps that doesn't have any value, like over here, this gap. Okay, just let me actually find something better. If I can find it. Okay, I guess I got it. Okay, I got it. Look, there is a gap. Okay, here, for a long term, from this specific time frame, look at this gap. This gap doesn't have any value. This is not a fair value gap. This is the fair value gap. See this gap? This is the fair value gap. It has a fair value. Now this gap, has a value, okay, but not fair value. It has a value. This gap has a value, but this is just a gap. So here, this is a gap. This is a gap with a value. This is a gap with a fair value. We will use this gap for later use. We are not going to use this gap for later use. We are not going to use that gap for later use. But we are going to use this gap for later. Not just done. It's just done. No, this is the last gap. So it has a fair value gap. I don't know you guys got it or not, but it's a deep thing. Okay, you have to understand this. I mean, I have no idea how to explain this thing, but that's why I told you everything is easy over here. Look just look every single day where market is coming, where market is going, where it is going to stop. Every single day, how many times I have to show you the importance of the fair value gap. Look, where did it came to this new day opening gap. I have shown you how many entries I have taken when it come here to that gap. Okay, this gap has a value. Market has taken the liquidity, market structure shift. This is first time market came here, okay, to that specific area. So I'm going to one minute chart now, to that area. See, it come here to this one gap. This is that area. Okay, this is that area, remember? So price came here. Where did it came? To that gap, which gap has a value. When it came here, what it has done, did it take any liquidity around that area? Look, this low, this low, this low, this low, this low, this low, this, all of this low has taken by that simple run, by that very simple run. Okay, brother, I got the information. So what is important actually here? After that, it started to consolidate, taken that consolidation by that run. See, it has taken that consolidation. Boom, got my market structure shift, fair value gap, first fair value gap, breakaway gap, two fair value gap. This is a gap where what have a value. This is a fair value gap. I am going to use that gap for later use. Come to this gap, boom, buy side liquidity taken, finally traded the new day opening gap. Okay, it has taken the all the buy side liquidity around that area when it come here. Was that I have already explained all of this thing to the first part of my video. Please watch that, you will understand. It has taken the liquidity, giving me the market structure shift. This is the gap which has a value. Market came to this gap, boom, I'm going to use that gap for later use. So look, when market came here for the first time, did I get any setup to my 1 minute chart? I got a setup. Is there any buy side liquidity? I have this buy side liquidity, that high, all of them are relatively equal highs. I have a buy side liquidity over there. Go for that trade. I'm going to this 15-minute chart one more time. Okay, now next time price came here, see this fair value gap, same fair value gap. This is all the first time. Now next time price come here, where? To this fair value gap. What is that fair value gap? That is the entry gap. Am I talking about any other gap over here? No, just this gap. Okay, just mark this one more time. Go to 1 minute chart again. So that is that area. Okay, so I just marked it. This is that area. I'm going to remove it. When is the first time market came here? Just look, I'm just making this more larger so that you can understand. Did it reach to this fair value gap? Is it reached to that fair value gap? Can you see? See over here. No, it didn't reach. So why? See over here. Okay, it failed to reach here. Am I going to take that buy? Very nice market. I mean, market has taken this liquidity. Very nice market structure shift. This is valid market structure shift. This is the first fair value gap. Maybe there is a breakout gap, something. Am I going to take that entry? No, I'm not going to do that. Why? It didn't reach to that gap. Why it didn't reach to that gap? I don't know. Maybe it has just made the liquidity here so that it can take that later. Maybe. I don't know. But I don't need to know that. Am I inside the session? Yeah, I'm inside the session. Should I take that entry? I should not. Why? Because this retracement is happening from a random level. This is a random level. Every single time. This is a random level. Okay, look over here. Market has taken that buy side liquidity. Nice. It went lower. Why it came here? To take all of this liquidity. Came here. Now, where did it came? This is the first time. Look, this candle has traded that same fair value gap for the first time. Was there any market structure shift for higher market structure shift? No. Should I take any entry? No chance. Market went lower. Was there market? No. It went lower. It came here. Now why it came that long? It has taken that low. See, just let me mark it, okay? Just a second. I'm just going to use this one so that you understand. Okay. Can you see it has taken that low? Here, it has taken that low. That's why it's fall that much. It came here to take that specific low, take the liquidity. After taking the liquidity, was there any market structure shift? Obviously. Can I take that entry over there? This is 22 pure YT model. Just go for that entry. Where is my market structure? I mean buy side liquidity. Brother, I have explained all of this thing, okay? So please watch that part. So all of these highs are relatively equal highs at the same zone. Just go for that. Brother, you are just giving us some hindsight. Oh man, I'm not giving you some hindsight. I have already shown you. I mean, the guys who are with me from the very beginning, they are now getting angry. Oh brother, how many times you are going to show the same thing? Same single thing. How many times you are going to show us? Just- Okay, I got it. Here, see that entry from here to here, the same entry, and I just marked the water block for later use. If you remember, I have explained the next entry. When see this is that order block level. This is that order block level. So I am going to use. I mean that was a little bit deep discussion. Then I took another entry around that area. Here I took another entry to that area, that breaker, depending on that breaker. So this is that same level over here. Here that was the market structure shift. That was the entry breaker block. At the same time, I was watching how it react that area. If it can touch the low of this parallel gap, I'm not interested to take that entry then. If it can touch one more time to this parallel gap, because it has already done its job around that area. It should not touch it because I need the water block reaction. I don't need this parallel gap reaction now. Brother, I don't know when I should use the parallel gap, when I shouldn't use. Then just go for the first two entry. Just go for that first two entry because I took that entry depending on the water block. I aligned the breaker block with the water block. Oh man, here is my breaker block. I mean, this is my breaker block. Oh, you have no idea where the breaker block is. Where the breaker block happened, you have no idea. Trust me, man. Nobody. Until now, I didn't see a single person who talk about the word breaker block where exactly the breaker block actually happened. Not even a single person. Where you should expect the word, I mean the breaker block. Should you, I mean, do you want to show me the breaker block? I can show you within this price action. I can show you some breaker block. This is my breaker block. Low, high, lower, low. This is the high. That is the breaker block. It has 95% chance to work. Do you want to show me another breaker block? Where was that? Where was that? Where was that? I guess. Let me find it. Low, high, lower, low. Okay, wasn't it? Amen, 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 amen. I got it. I got it. That is my another breaker block. It has 99%, 95% chance to work. 95% of the chance. Now, this breaker block didn't give me any entry. Okay, it didn't give me any entry. There was no entry setup. Here I got the entry, I took the entry, but here I didn't get. Now, depending on the breaker block, why this one is breaker block? Because between two high, I mean between two high there was the low. That is why that was the breaker block. There was a rule, when market is going to break the breaker block, you can take your entry. I see told that, but I don't get confident about that. I love this type of reaction. Market will go above the breaker block, it will come back again to the breaker block, I'll take my entry. So I really love that. Okay, high, between two high, this is the lowest candle. Now I go for the consecutive order block. ICT told to go for the lowest one, I go for the consecutive breaker block. I go for that. Okay, I'm little conservative. So that is the between two high, this is the lowest candle, that is the water block. This time I didn't get the chance. Okay, this candle, if it could trade that, then this is my liquidity, much clean liquidity around that area, because that was the shallow run. I didn't get my chance over there to take that entry. No idea, man. I mean, there are someone who actually know better than me. Okay, I'm not talking to you guys, so don't take it seriously or don't take it personally. Okay, I'm talking to someone who is here actually learning from me, who wants to learn from me. I'm talking to them. Okay, that's why please don't get serious and don't think that this guy is bullshit. So I'm talking to them who actually here to learn from me. That's why I'm telling them they don't know when the breaker block happen, when the water block happen. Every down close is not the water block. ICT, how many times ICT told that every down close candle is before the displacement is not the down, I mean water block. How many times ICT told? Then why this is not a water block? Because there is some sequence. Okay, I thought I will make the video about the sequence, and later I actually I mean, I understand that if I do that, that's gonna be some kind of controversy, and I don't want to make that controversy. That's why I just skip that one. And breaker block explanation, that is also I am gonna skip. Okay, because this type of things will make the controversy. I don't want to do that. Whatever I learn it by my experience. Whenever I see mark something, I try to find it out why he's going to mark that on every single time. Whenever he do it, I try to find out what is similar from everything, and when I get something that works 90% of the time that is similar, I take it as a rule. What ICD never talked about, but he did it intentionally or unintentionally, I have no idea. I take that as my rule. Whenever I see it happen like that way, I take that on, and 95% of the time, that's why I'm correct. Okay, long. Great to see your analysis, brother. You are sounding more confident with teachings, which is great to see. Keep it up. Thank you, Shahid. Thank you, brother. 150 rules, lol. I wouldn't take a trade at all. Oh no, it was just an example. ICT told. So I just reuse that. Okay, market always move from internal liquidity to external liquidity, and external liquidity to internal liquidity. Fair value gap will old highs, old lows. Maybe, Shahid. I don't see the market like that way, brother. But obviously, maybe it works like that way. Maybe, okay. What do you think USD index will do tomorrow? Max, I have already done the I mean DXY at before coming to Nasdaq. So you have to rewatch that part, brother. CM Chetan, do you use balanced price range? Can you pick any balanced fair value gap, one which is not balanced? Just wanna know what makes you thinking fair value gap is balanced and will not extend it further in time. I have seen your video on balanced. I expect little more explanation about balanced fair value gap. Okay, just think this is a bull run. Okay, so this is buy side imbalance, sell side inefficient. I need the sell side now. Okay, I need a sell side only, not anything else. I just need a sell side. Now I got this run. Okay, so this is sell side. This is not inefficient anymore. So this is balanced price range. Now you will get this information from even ICT, from even other people, other YouTuber, from every single one. What I just told. I don't go for the general thing. Okay, this is the general thing. Every single person will take this. I don't go for that. I just go little deeper. Okay, what ICT told them. If I say, I mean, if you see the balanced price range, what should be your expectation? That market will come over here until the low or the consequent encroachment of that fair value gap, and it will take the liquidity. That should be your expectation from a balanced price range. Okay, what I told, until this run, okay, until this run, this is not balanced. It is not balanced yet, because you will see sometimes, okay, sometimes market go again, it went through that, it come back again, it will keep doing this. I don't know when it is that. Now when it is balanced, then why market is doing this at the same area? That's why I don't take it as balanced price range until I see this. Okay, ICT expect this. Okay, when he sees this is balanced, he try to take a sell around that area, You would love to take a sell around that area until here, maybe for example until that sells a liquidity. He would love to take that on. I don't want to do that. What I want to do, I want to say it is balanced or not. If I see it's balanced, I am going to remove that from my chart. The balance price range I use only to remove it from my chart. The fair value gap to remove it from my chart. That's why I use the balanced price range. I don't use the balanced price range or that theory to take the entry. Now, if you want to take the entry, here is your balanced price range. If you want to take your entry, depending on the balanced price range, this should be your balanced price range. But if you want to use the fair value gap, if you want to know how long you would love to use that, then you need to wait until here. You wait until here to keep it on your chart. Is it clear, brother? I mean, if it is clear, then it's clear. If it's not, then I have no idea how more I can explain about that, brother. This is the way I use balance question to use a fair value gap or to remove it from my chart. Because if I see this happen, I just remove it. I don't care. I don't give a shit about that fair value gap. Not anymore. I don't give it. I don't give any concentration about that fair value gap. If I don't see this, I keep using that. I keep using that fair value gap. Whenever price come here, I go to 1 minute chart and I try to look for setup around that area. If I see it happened already, I just remove it from my chart, and whenever price come here, I don't give a shit. I don't go to my 1 minute chart and don't look for any setup around that area. Now it's up to you. I don't want to make it more confusing, but this is everything I told about the balanced price range to my YouTube channel. Okay, so why it is important? I'm just going to. I don't know. I already messed up with this, I think, but I'm gonna clearly say this one more time. If you want to take your entry depending on the balanced price range, then this is your balanced price range. I don't want to take entry from the balanced price range. From where? From 15 minute chart. Okay, this is the balanced price range from 15 minute, for example, from 15 minute chart. So he will actually expect a setup around that area. He's going to take an entry around that area. I'm not expecting that from same time frame. That's why I'm not using it as a balanced price range. Whenever price is coming here, I just see this as a repriced. So it is repriced now, but not balanced. Until it is not balanced, I'm careful about that fair value gap. For example, if I see market came here and it is going lower, just think like that way. I'm not interested to take sell around that area. Even if I see a very nice setup from 1 minute chart, I'm not interested to take that. Why? Because this fair value gap is not balanced yet. It has to be balanced. If I see this one, I get confidence. Okay, it has traded that fair value gap. As it is not balanced, I can use that fair value gap to take my entry to my lower time frame. That's why I'm using it now. When I see this, it happened already. Okay, something like this, either from confident question or from here, from the same time frame, from 15 minute chart. It happened already. It has taken the liquidity. It's balanced. I'm going to remove this one now. Not remove, sorry, I'll just keep it up. Okay, now next time price come here, where? To this fair value gap. I'm not even going to change my time frame, because this is already balanced. Price has no need to give me a setup, or this is a random level now. This fair value gap is a random level now. I don't care about this. I guess this time it is clear. I'm sorry if I make it more complicated. My English, man, my English. Oh, I'm struggling with my English, man. Yes, it's clear now. I just wanted to know how you utilize them. Clear now. Okay, CM, thanks for clearing. And guys, this is the first time asking. Don't forget to give me a like. I deserve a like, man. I deserve a like. So please give me a like. So see this. This is the last. This is the power of the last parallel gap. You don't need anything else except the last parallel gap concept. Here, the last parallel gap from. Okay, this was from hourly chart actually. I explained why I have used that hourly chart. So if you watch the first part, you will understand. When price come here, look for setup. When price come here, the entry gap, look for a setup. Expect this last fair value gap. Why it is important? Why? Because this last fair value gap will tell you market is going higher or it is going lower. This is specifically this fair value. I don't care about anything else. This last fair value gap, it is going to tell you, am I going higher? Am I going lower? If it can hold, market is going lower. If it fail, market is going higher to take that buy sell. If I see it fail, I'll just go 1 minute chart. From 1 minute chart, I'll look for a buy setup. If I get a buy setup, boom. I've already explained how to use the last fair value gap to setup. Okay, I mean 22 YT model or the consequent encroachment rejection. Top tap to the top of the fair value gap. Go for the buy setting. Just go for it. Don't think anything else. Just go for it. You will be right more than 95% of the time. More than 95% of the time. I showed it already, man. I have already shown it. Okay, whatever I'm telling you here, don't think this is all hindsight. I am showing it every single day, man. I don't know how much confidence do you need. I have no idea. This last parallel gap, why it is important. I would love to see how it reacts if it fails. If I see body close below this parallel gap, body close below this parallel gap. Not remember, not the consequent encroachment. Body close below the parallel gap. I'm going to take that sell leg. There is nothing that can stop market to take that sell leg. It is going to take that sell leg. That is more obvious now. Now this is a question time. You guys can ask me any type of question. Okay, I'm happy to answer your question. Long time, long discussion. Why do you think, I mean, trading is too hard? If you can control the over trading, that's the only thing you have to control, nothing else. Just you have to control one simple thing. This is psychology, man. Every single person will tell you work with your psychology, work with your psychology, work with your psychology. This setup can use forex also. Kapil, I don't trade forex. I have last traded forex in 2020, I guess. 2020. After that, I didn't trade in forex. And at that time, I was new. Okay, I had actually, I have no idea about the price action in that time. So I can't tell you it will work in forex or not. But as per ICT, as ICT told, everything works in forex. So this all concept is not mine. It's all ICT's concept. So if ICT told that it works in forex and every single market except crypto, then maybe it will work. Okay, you have to do the back test. You have to see how many times it works, how many times it doesn't work. Then you will get an idea. You have to do this homework, brother. As I don't trade forex, so I can't clarify you that it will work perfectly or not. I work here, so I can clarify it will work here perfectly. Okay. So what I was telling you, every single person will tell you about the psychology. Work with your psychology, man. Be strong, be strong. No, they all are wrong. You don't need to be, I mean, strong. Every single person, even ICT, whenever they take the entry, they are emotional. They are emotional. They are thinking, is it going to work or not? Yeah, some of them are really so hard. Who are thinking, okay, this is going to be a losing trade. Okay, but trust me, man. When it is the live money, controlling emotion is impossible. Impossible. Nobody can, without the robot, nobody can control their emotion. Not even a single person. Then what is then psychology? Psychology is just control how many trades you are going to take. One trade, two trade, 20 trade, 30 trade. How many trades you are going to take? You just take an losing entry. What is revenge trade? That means you are taking more than one entry. That is psychology. Work with your psychology. That means work with your trading. How many trade you are going to take in one day. Work with that. Just make it simple. Take one contract, one day, one winning or one losing. Anything. Just take one trade in one day. Train yourself like that way. If I take a losing trade, I'm not allowed to take another entry whole day. You will That will help you to be patient for the perfect setup. For the perfect setup, because you are telling you yourself, I'm just allowed to take one entry only. If it doesn't work, I'm not going to take another entry. I'm not permitted to take another entry. If I do that, I'll I have to close my chart for forever. If you just can tell yourself this and yourself start to believe it, you will wait for the perfect setup. You will be not greedy, because after taking the setup, if it doesn't hit my target and hit me to the break even, I'm not going to take any other entry today. So I have to close it as soon as possible. I'm gonna close it because I want the profit. This is my only chance. I'm not going to take another entry. What else you are going to, I mean, what other helps you are going to get from there? You will never blow your account. You are never going to blow your challenge. If you take a challenge combine from top step, you are never going to blow it, because you are not over trading, you are not revenge trading, you are not taking your decision by your expectation, you are not just taking bad entries, nothing. This is your psychology, man. Who told you about this? Have you ever thought like that way? If you are allowed to take one entry in one day, that should be one contract, not more than one contract. Just one contract here, one contract on my left. See my cursor here, one contract. That should be your maximum limit. You are allowed to take one contract. You are allowed to take one entry in one day. Practice like that way to your paper money. 1 month. Come back to me and tell me you are profitable or you are a loser. If a single person can tell me that, no, brother, I am a loser. After 1 month, there is my account history and I get loss. That is my losing. I mean, I'm not profitable. I will just, I will never come back to you. Never ever. Because that is impossible. I tried by gambling, okay? Not even reading the price. I tried that by gambling. And now from where I got that, I don't remember. Okay, I should give the credit to him, but I really don't remember when I heard that thing and from whom I have heard that thing. I really don't remember. But that guy just told, train yourself to take one trade one day with one contract. You will be the consistent profitable trader, and there is nobody who will be stronger or who has the strongest psychology comparing with you. Not even a single person. Still I'm working on that. Still I'm working on that, because I'm a very weak person. Okay, I don't have that much strong psychology, so I take session wise trade. Okay, morning session in London session I don't trade, but sometimes I take on entry. But New York session in the morning I take one trade. If I lose, I try to mitigate my loss for 1 or 2 times, and then to the PM session I left one more trade for the PM session. So near about, if I'm winning to the morning session, I close my trade. I mean, I just finish for the morning session. I come back again PM session. I trade another. I take another entry to the PM session. Max most of the time. Okay. Sometimes I break my rules as well, and I get fucked up. I'm sorry for my word, but to be honest, okay. Whenever I break my rules, I just get. I mean, what do what did I? What do I want to say? Okay? This is your psychology, man. I know today's we don't have the market. I mean, market price. And trust me, brother, if you compare the market price with the thing I'm talking right now, this is nothing. This market price is nothing. As I told you, I tried that by gambling. Okay, I have no idea where market is going. What I did, I take an entry, my stop loss for 500, my target profit is 500. I took that entry one day after 20 days. Okay, 1 month, 20 days trading day. After 20 days, I was in plus. No, I was in positive. So green. I was in green, man. Are you using breaker block too? That's my favorite, man. Breaker block is my favorite. Okay. Uh, but I'm telling you the easiest one, so go for that. Okay. Don't. Don't try to trade Baker right now. Wait for the ICT's book, because after releasing his book, I guess you all of you will learn so many things. You have no idea what you are missing. Okay, I guess so. I mean, I guess he will reveal everything to his book. I guess. I'm not sure, but he is going to do it. What I was telling you. This is your psychology, man. If you can work with your psychology like that way, there is no one who can stop you. When I did it gambling, I was positive at the end of the month. Now think, if I can read the price little bit. Now I'm not doing gambling. I'm just trying to read the price, but I don't know how to read the price. I'm learning how to read the price, but I can know. Okay, maybe there should be an entry, and from 1 minute chart, when it tap to this fair value gap, new day opening gap, I should wait for the market structure shift, the fair value gap. One of the guy, he doesn't know anything about the price action, but he told that if you see two fair value gap, don't wait for 50%, or don't wait for OTE, don't wait for I think breaker block, anything. Just don't wait for anything. Take your entry over there, cover the breakaway gap by your stop loss. That's all. Just do it. Target for the relatively equal loss or the last fair value gap. Just go for it. If you know little bit price action, just one trade, 1 day, 20 days, consecutive 20 consecutive days, come back to me. Tell me you are still in profit or not. One contract, you have to take it seriously. You can't take it like a paper trade or something. No, this is paper trade, so if I take a loss, I don't care. No, not like that way. You have to think that this is my real money. So let's try 1 month only, 20 days. If it works or not, come back to me. If it works, if it doesn't work, just let me know that. Trust me, brother, you will never come back to me. Never ever come back to my stream. You don't need to come back here, because you have already found a way so that you can be profitable. It's enough for you to be profitable. This will make you stronger, the stronger person, the strongest person all over the world. Here you need strong mind. We can't take our control our emotion. What do you think? Whenever I take my entry, that is so perfect for me. Even when I take that entry to my paper account, I get nervous. Is it going to work? Is it going to work? I was just nervous until it's not closed. In hindsight, it's very easy to show. Very easy. See, it came here. Travel gap trade, same rules every single place. Same rules, same thing, every single time. But whenever we are in the live money, live price, and there is not paper trade, instead of that, that is all live money. Trust me, brother, that is so emotional. So emotional. Nobody can control their emotion. Not even a single person. If anyone tell you, oh man, I don't care if I take a loss over there, I don't care, he's lying. He's trying to hide it. If I take ever an entry in front of you, if there is no paper trade, instead of that, that is my money, you will say, I get quiet. I forgot all of you. I forgot, because I'm reading price. I'm emotional now. I'm just reading the price consistently. What to say, what is that? Continuously, okay, continuously I'm reading the price. Is it going to work? Everything I'm just watching here. Every single thing, every single candle I'm reading. Why? Is it going to work or not? If I see it's not going to work, it's not working with my expectation, I'm gonna kill my trade. Okay, I don't care about it. I'm gonna kill it later. If it works, I'm not frustrated as well. I'm not frustrated because I know how many setups I can find in 1 day. Trust me, brother, even if the worst day, you will get near about 10 trades, 10 entry opportunity. Even if it is the worst day, not even a good price action, you will get at least 10 opportunity to take your entry. All you have to understand is, no man, I'm not going to take more than one entry in 1 day, even if it is losing trade, even if it is a winning trade. Listening this is too easy. You will start to think, this guy is crazy. Oh man, one trade 1 day, how can be a millionaire then? I need billion of dollars. How much have you earned? How much did you earn until now? Did you earn million? Just think, did you earn 50K? No, man. Why? Because you are not working with your psychology. That is the most important level. That is the most important part. This price action is not important. This week, where market is going, that is not important. Nobody can tell you that this week market is coming here, this week market is going there. Nobody can tell you that. You will act with the price action from the lower time frame, maybe from the higher time frame. That depends actually. So when nobody knows where it is going, then how somebody is very profitable? How somebody, you see the top step TV. I saw a guy who actually who is the winner for near about 35,000 and on the leaderboard, yeah, something like that. His everyday's winning is $500. Okay, that means if you take one contract and if the run is 25 handle, that's enough. That's totally enough for earning $500 per day. So he used some copy trade or something. So he has three account. I mean three account, and all of them are connected with the social trader copy trade. So three account, that means $1,500. After 20 days, near about $30,000. So some days he got little more. So it was near about $35,000 something by 1 month. So I saw something like that. So earning money by one trade is not important. But you can tell me, brother, every day I'm not going to win. Yeah, first train yourself to take one contract, then go for try one more time to mitigate your loss. Just one more time. So from one entry to two entry. Trust me, after 10 years, you are not going to listen to me. You will know how many entries you should take. But it takes time. First, you need to pay yourself. This is the time to pay yourself. How do you pay yourself? By doing that type of training to yourself, to your psychology. What is the psychology? There is one thing, just one thing. Don't over trade. Take one entry. That's all. That is psychology. Nothing, man. Trust me. I have no idea how can I make you believe it. There is no other psychology except this thing. Just don't believe me. Try it by yourself. Let me know that. I will try to give you something that can help you. If you get angry on me, I'm extremely sorry, man. I'm extremely sorry. But this is psychology. Now, if you somebody will tell you, brother, don't be greedy, don't be greedy. Okay. If you take the entry over here, just for example, this is your entry, and maybe this is your target. Okay. So they will tell you, don't be greedy, don't hold your trade for so long. Don't hold your trade for so long. How do you know? How do that guy know that market is coming here or market is coming here? It is going to stop over there. How do he know? Nobody knows that. So how can you be greedy? You are not greedy, man. You are not greedy. You are seeing that level is potential. Market can go over there. That's why you are going to hold it. I'm seeing that level is not potential. This level is potential. That's why I'm holding until here. Just for example, okay? Just for example. You are seeing this level is important. I am seeing this level is important. Someone else, he is thinking this level is important. Okay, for example, he is thinking this level is important. Now all of three took our entry around that area, just that area. He closed his trade over there. I was holding my trade. I was believing that okay, market is going to take that liquidity. I was trailing my stop loss. I got stopped out over there. You are thinking market will come here to take that liquidity. You also trailed your stop loss and you get stopped out over there. Now this guy who closed his trade, he is more profitable, right? He is more profitable because he took, we are stopped out here, he was here, so he's more profitable. Now this guy will tell us, you and me, tell us, guys, you are so greedy. You are so greedy. That's why you got stopped out. See how much profit I got more than you. Is he right, man? We Are we greedy? No, we are not greedy. I saw this level is profitable potential, you saw this level is potential. So why we are greedy? Why you are not greedy? If market come here and it went higher again, then you are not profitable. You will be also stopped out over that area. Then you are also greedy. No one is greedy. No one is holding their trade. What is the point, brother? What is the point? Come to the point. I'm coming to my point. As I told you, before the sell side liquidity, every last payable gap is important. Every single last payable gap is important. You take two contracts, for example, you take a partial around that area, you trial your stop loss. So you take a partial around that area, you got stopped out over there. That means you have paid yourself. If you are not stopped out at that area, see, it will hit your extreme liquidity. So you will hold your trade from here to here. You have to take the partial around that area. Brother, I am going to use one contract only, so I have no chance to take my partial. What I told you, if you have no chance to take your partial, either you trial your stop loss too fast or go for the obvious liquidity, like over here. Market came here, market structure shift, this is a parallel gap. Market came here, that is so clean buy side liquidity. Don't go over there because that is the extreme. Where is your partial? Just always, even whenever you will take your entry, always look for the partial level first. Here the last parallel gap is the partial. Why? Because there is no swing high which is near that liquidity. So if you have no swing high, you have to go for the partial area. You will take your entry around that area, you will close your trade over there. That very small run, that's enough for today. I don't need anything else. That's enough. You can't hold it until here. It will build your confidence. Later, when you will be confident after maybe 100 trade, after taking 100 trade, you saw, okay, within 100 trade, I got 80 trade profitable. 80 single trade. If you just use the whatever I'm teaching you here, you will be your 90% trade will be profitable. 90% trade will be profitable. 100% it's not, it's impossible. Okay, it's impossible. Everyone will take the losing trade because we missed. I mean, we do mistake. We do mistake, man. Market never do mistake. We force, sometimes we force market to give us something, or sometimes we don't get the signal what market actually would love to give us. We missed it. When you will see, okay, out of 100 we got 80 winning trade, you will be confident. You will start to take two contract. You will take one contract out here, you will hold it the another one until it reach to your liquidity level. Simple, man, simple. So we are not greedy. Nobody is greedy. Then what actually stopped us? Ask yourself. I can see there are some little people. Okay, I'm gonna close my session. I'm sorry because I'm just talking too much today, and it's all outside of the price as today is Sunday and we have no price action right now. So I thought, okay, let's talk about the price action little bit. I mean, not price action, psychology little bit. So that's why I have actually started to talk about psychology. So if you're getting angry, I'm extremely sorry, brother. Trust me, it will help you. Unconsciously, it will help you. Today or tomorrow. Nobody is going to tell you that. Today or tomorrow, you are getting benefit by this useless speech by me. I'm no one. It will help you, man. Trust me. Trading, nothing. What is important is your psychology. Every time, just believe one single entry, just one entry will make you profitable. Train yourself. I can see some people over here. Ask yourself and give me the write it down to the comment box. Write it down. Whenever you tried to take an entry, maybe it is a challenging entry. Maybe you tried by paper trade. You just reset your account with some specific amount and then you tried it. Okay, whenever you did it, wasn't it The only reason to blow your account, to blow your mind, to take so many losing trade on after another, on after another. Just a single person, if I'm not right, if it didn't happen with you, just write it down. No, brother, you are wrong. Just a single person. Please write it down that I'm wrong. Overtrading wasn't the reason for blow your mind. I took an entry here. Just let me explain what I mean by that. I take a sell here. That was my target. I got stopped out here, maybe somewhere here. So I thought I saw this is a market structure shift above. It has taken liquidity. So I take another buy here. Market went little bit. It went lower. I got stopped out here. Then I was thinking, okay, market is going higher or lower, higher or lower, higher or lower. I take another entry here. I put very tight small loss, very tight small loss. I got stopped out here. Then I gave up, and I think, okay, market is obviously now going up. I use the maximum contract size, take my buy, boom, I blow my account. Is it the real thing for blowing your account, or there is anything else? Just let me know. Later, when it happened totally and you come back, you saw, okay, that was really so clean price action. Market went higher to take that buy side liquidity, then it went lower. That was market structure shift. Price trade that fair value gap, it went lower. When you come back, and then you started to think, oh man, I should have waited. Why I did that many trade in that area? Why I did it? I should have waited. If I waited, then maybe that I could take that entry. Didn't you think like that way? Just a single person. If didn't, if it is, if I'm wrong, let me know. Write it down. No, brother, it never happened to me. Okay, brother, it's NFP FOMC week. Should we trade or safer to avoid? NFP FOMC, it's not. I mean, that type of news help us to take more entry. Okay, because if NFP FOMC brings more volatility, we don't trade news, but after news, or maybe I mean before news. I mean, if the news is at 8:30, maybe at 7 or 6 a.m. in the morning is the perfect time to take entry. Okay, so this type of news days we actually try to trade because there is much more volatility. We can trade micros to take partials. 10 micros is equal to 1 minute. Okay, Shahid, that's a cool idea. Obviously, we can do it. I never tried like that way. Joy peak at 15, 12, 17, 55, 0.50 is that CIST, change in state of delivery. 15, 12, 15, 12, 15, 12. Okay. Is this, if you are asking about the water block, mm, yep, I agree. Not 100%, but 80% I agree. If you mean change CISD by change in state of delivery means by water block, if you think like that way, water block, then I'm 80% agree with you. Okay, not 100%, but 80%. Yeah, not 80%. Sorry, I'm not 80%. 90% agree with you. Joy peak. Trust the brother. Trust me. Okay. So I guess everyone is agree with me. Over trading is the real psychological issue. If you can control your psychology, that means you have to control your uh, over trading. That's all, man. Just control over trading. No one is going to hold you from your profit, from your benefit. How long it will take to be millionaire? Man, 6 months. 6 months is more than enough. Why you are not then the millionaire? There's so many things. Okay, my man who are with me for from very long. from very beginning, they all know why I'm here in YouTube, why I'm doing something in front of all of you guys, why I'm not trading. Instead of I'm just using paper money in front of all of you guys. Everything they knows, okay? So if you are here to judge me, I guess it's a waste of time. If you want to get something from me, I will give you the same thing that works every single time. So today I'm talking about here. Today, tomorrow I'm going to talk about another. Okay, no, I'm not doing that. I'm just showing you same thing every single day. Every single day you will see the same thing. As I explained, how should you frame your trade? How should you frame your trade? Just using 15-minute chart and 1-minute chart. Watch the first part. If you are not from the beginning, just watch the first part and see how I frame the trade by only two time frame. Just these two time frame, 15-minute chart and 1-minute chart. I don't need anything else, nothing at all. You also don't need on nothing. All you need to do is you have to mark the liquidity, you have to mark the fair value gap. Is that a fair value gap, or is that a gap, or is that a gap with value, not fair value, with a value? If you understand this, these three things, okay, enough, man. You are already profitable. Now, what is the barrier? What is the barricade? What is the obstacle for being profitable? That's you. That's you. Control, man. Control. If I take one entry, win, finish the trade. Just close it. Go over here. Come here. Close the chart for that day. One entry, lose, close your chart. Come back tomorrow. Just a second. Okay. My cat is calling. I'm just. How are you? I'm here from Pakistan. Hey, Tiger Trader, I remember, man. I remember your name. Whoever comment here, I try to keep remember their name, okay? And when it's been a long time you don't comment, then I forget. Otherwise, I always remember the guy's name. I try to remember, okay? So like Joy Peak, I know him. Casey Jeff, I know him. Shoit Selim, he's after so many days. CM Chitan, I saw his message. Then Max 254, I didn't see his message, never. I mean, so far I remember I didn't see his name to my ear. And then Dolfo, I am confused. Is this your first comment or something? I don't remember. Okay. Then Crystal Kias, Sarah actually. So I didn't see her message before. So if you comment, I try to keep remembering them. So that's what I was talking. This is psychology. So what you are getting from me, what you are getting from me, you are getting some specific thing. I'm telling you about the fair value gap today. Tomorrow about the water block. The day after tomorrow will be the breaker block. Then again another thing, another thing, another. No, man. If you are here to learn so many things from me, I'm sorry to make you disappointed. I'm not going to do that. Bruce Lee, what he told. I'm not afraid. I'm not afraid of a man who has practiced thousands way to kick. I'm not afraid of him. I'm afraid of him who practiced one kick thousand of the time. I'm that type of guy, okay? I'm very old, what is old model guy who actually practice one kick, but I practice it thousand of the time because it works thousand of the time. Why I need more things? By only this concept, I can get 10, 15 trade every single day. Now, everyone is going to work? No, maybe no. 80% of the trade will work. I'm going to get that. Do I need all of them? No. I can just justify when I should take my entry. When I'm going to take my entry. That's all. Am I going to take that entry? Is that more obvious for me? If it is more obvious for me, I'm going to take that one. Okay. Here. Is it more obvious trade for me? No, it's not more obvious. That was breaker entry. But for me, comparing with all other trades, that is the most obvious one for me. I saw 95% of the trade time it worked. 95% of the time. So that's comfortable for me. This works more. I mean, sometimes you will love some entry. So that is my breaker entry, and I love it. So I can't say that it's something little different. There is another entry. All of this thing is my entry. Okay. I mean, taking entry is nothing. All is your control. How can you control yourself? See, market came here. Okay. If I get a perfect setup here around the session, I'm going to take that on. When? If I see very nice liquidity around that area, I'll just take it. Oh man, simply it's let me talk more about the thing. Okay, just a second. What do you say? Look over here. Okay, okay. See the movement crosser. I don't know. On my left, trade of it where it is. It should be the paper trading. Okay, here. Look here. Trade of it. Okay. This is the real money. Real money, not paper money. I took that entry. I put my sell stop over there. That was my sell limit. That entry was from the Friday as well. This entry was from Friday as well, the London session. Market came to the new day opening gap. See this new day opening gap? That was my target. I took a partial and that area somewhere, and then I hold the rest. So far I remember, I forget actually. I keep the rest late over there, or maybe I just trail my stop loss over there, and then morning session I got stopped out to break even two times, so I didn't trade the rest of the day. That was the entry from my paper money and from my real money. Just come here. This one is paper money, so I'm not going to show it to you. Here, over here. That was the news trade, man. At that time, okay, 8:30. That was a news. Look, same logic. Where price came to the new day opening gap low. This is the low of the new day. Look on my left. To my left, there is a 15-minute chart. Left. On my right, there is 1-minute chart. So on the left chart, look the week. Where did it came? This is new day opening gap high. This is new day opening gap low. Price came to this new day opening gap. When it went just at the level of the new day opening gap high, I took my entry. This is not paper money, man. This is not paper money. This is trade of it. Say this is real money. This is my express account. I took that entry to my express account. Yeah, I trailed my stop loss too fast, but with a logic. I put it below that breakaway gap. Until that, I took my entry here to the top of the new day opening gap. It has taken all the liquidity. I don't need to wait anything else. That's cool, man. It will fly. No worries. Oh man, you just talk about the what to say the hindsight and the paper and the paper and the paper, right? What is this, man? Look on my left. Okay, that is Tradewit as well. I don't know you can see it or not. This is also Tradewit. Look over here on my left. Why I took that entry? Where did price came? To the new day opening gap low. Is there anybody closed below that new day opening gap low? No. It is respecting. It has taken all the liquidity. Now when I'm here in 1-minute chart, I took the entry depending on the breaker. That was my breaker entry. But if it can go above that one, I have already explained how you can take that into with our well-known setup. Okay, I mean two fair value gap, one fair value gap here and the fair value gap here. Where did I put my stop loss first? Below the breaker. This is not paper money, man. This is real money. Three contracts, okay? I took two contracts, then I add one more. That was three contracts. Sell limit two, sell limit one. Where? Above that high. See, that is my on my left. Look on my left. That is my or here, okay? That is my first partial. That is my target. This is real money. I've done that. Okay, so I'm not just using hindsight and telling you, man, this will work like that way. That will work like that way. Was that straight away? Okay. Look, I short over there. Okay, I took one entry, then took another entry. Three contracts all over. Went where? Take two contract, one contract here, one contract here, one contract I got a step out. When it went above that fair value gap. Just when it went above that fair value gap, my stop loss over there, I got a stop out over there. I took entry to that fair value gap, exactly to that fair value gap. I put my stop loss above the constant encroachment. Same logic, okay? I was little bit conservative, so I put it above the constant encroachment of that week. But if you are more conservative, here you can put it here. Where should be your target? This is your sell side liquidity. That should be your target. Market should reach over there. If it doesn't reach, I don't care. I'm already profitable here. One partial, two partial, stopped out. Happy, man. Simple. This is paper money, man. You always use the hindsight or paper money. Oh man, see, this is not paper money, man. This is real money. Was there any? I don't know. Did I post any? Mm, I don't know. Is there anything or not? Okay, but whatever. If you come to my Twitter, you already know that how to use. So every single time I'm using the same concept. Now here I use the new day opening gap because I have that. If I don't have that, I will use the 15-minute fair value gap. Simple, man. Very simple. Here I have new day opening gap. So this setup, okay? Look at this one. Just look over here. This small fair value gap. I'm coming here to 1 minute chart. Where is that? Here. So this is that little, see this price action here, the same price action. Look over here. What do you have? Very clean buy side liquidity. Anybody has any confusion about that buy side liquidity? What is buy side liquidity, man? What is drawn liquidity? Relatively equal highs, that is my drawn liquidity. I don't go for session liquidity. I don't go for PM session liquidity. I don't go for previous day high liquidity, previous day low liquidity, previous week high liquidity, lunch hour liquidity. No, man, nothing at all. I don't need anything else. I go for something that is much more easier to identify. That's all, man. Brother, did you manage to catch Friday fire deal top step reset? Yeah, man, I got it because whole day I was actually watching Friday, the Friday that one because I one of my friend told me that they're going to give 100K account for free something. So I was waiting for that and I never use the reset. Okay, so I take a reset. So I will wait until Wednesday. If I get the 100K account, then I will do something crazy. I'll try to do. Okay, at the same time, I have one account running with $2,867. So I need near about some more dollar. Okay, so either I will take another entry and I'll do something crazy because I have a free reset, and if I get the 100K, then I'll try to use more contract size. Okay, something like gambling because I have a free contract, so I want to be free for one time to my trading. Okay, so I don't want to follow the rules or anything. No, just freedom. I want to use that because I have a free reset. And Friday a whole day I was trading and I was just listening. In one tab I opened the top step TV and I have used that one. Okay, so what I was talking here, just look at the price action around that area. Okay, from 1 minute chart you have very nice buy side liquidity. Okay, what you need now, you need a setup. Price came here, see it is falling. Where did it came? To this new day opening up. See that low, specifically that low, it came here to the new day opening gap. But brother, I didn't mark the new day opening gap, so I'm sorry, man. I can't go for the new day opening gap. Okay, market has taken liquidity, sell side liquidity. See, from 15-minute chart on my left, it has taken liquidity. Market structure shift. Is that displacement? Displacement. Is that market structure shift? That is market structure shift. Where is your first parallel gap? This is your first parallel gap. Where is your entry gap? That is your entry gap. Is price inside that your entry gap? Yeah, it's in my entry gap. Let me mark the entry gap actually. Here. See? This is the entry gap. I'm going to remove. Look on my right from 1 minute chart. It's in 1 minute entry. I mean entry gap from 15-minute chart. Okay. Now wait for the setup. Do you see any setup around that area? Can see a setup. Oh man, it's so nice, so nice. Market structure shift. Okay, okay, cool. Breakaway gap. That's cool. And entry gap. Don't say anybody, okay? Don't say anybody. Too cool. Is that immediate reaction? Obviously, man, it's very immediate reaction. Not, it didn't even take one more candle. One more candle to come here. I take that entry. Is that profitable? You see, how many handle, man? 23 handle. It's very small. Multiple it with 10 contract. That will be near about $200. So if you multiple $200 with 23 handle, how much it will be? I'm little weak in math. Please do it by yourself. No, and I'm not going to take 210 contract. I would love to take two contract. Okay, for $40. Okay, multiple $40 with 23 handle. You are very strong in math. I know, I know, I know. Just, just see how much it will be. Is this valid setup, man? Is it really valid? Let's see. First, did it came to any high time frame level? Just forget about the new opening gap. Okay, just forget about it. There is no new opening gap. Yep, man. It came to this entry gap. Why this is the entry gap? Look at the 15-minute chart on my left. Market taken sell side. Market structure shift. Market is coming. Where it is coming? To this first parallel gap. See, it came to this first parallel gap. Here. It came to this first parallel. After that, did I get any setup around that area? Yes, man. Very nice setup. Okay, is that immediate reaction, man? Just market take the liquidity and boom, something like that. Yeah, obviously that. Is that parallel gap? How long market takes to come to that parallel gap? It just take one candle, man. After making the parallel gap, it just take one more candle to reach to that parallel gap. Your entry will be that candle, not that in that candle. No, you will take your entry to that first candle whenever it tap to the first parallel gap. Why I'm going to take that entry, man? Do you have any buy side liquidity? I don't have any session high, man. I don't have any previous day high. I don't have any previous week high. Do you have 1 minute buy side liquidity or not? I have. Go for the trade. What if it hit my stop loss? You will just take a loss. It's going to happen. Okay, I took it. I got profitable. Let's look for another entry. So market structure shift here. I'm going to take that. No, no, you are not allowed to take that entry. But brother, that is a very small run, and this is a big run, huge run. You are not allowed to do that. It will teach you which entry you will look for the next day. In next day, you are not going to take that entry. Next day, you will wait for that entry. This entry will teach you with the thinking that I am not allowed to take more than one entry in one day. This specifically, this entry will help you to wait for the perfect setup next time. I didn't see that as a setup, man. Is that setup inside the session? Look, what time is it now when I took my entry? 11:51. Is that inside the session? Obviously, it's inside the session. Go for that, man. Is that valid? No, it's not valid. Why? This is the noon. This is the noon. Don't go for that trade. Why? Because this is the noon. From 12 to 1. That is the noon. Lunch hour. We don't trade in the lunch hour. That is gambling. Perfectly pure gambling. But brother, that is so exact. Everything is perfect over there. I don't care. I don't care, man. I don't care. Okay, I want to contact you in private for some discussion. Tiger Trader. See my here. See here. ICT Trading Concept. Okay, over here at the rate of NRT 12345, you will get the link to my description as well, the Twitter link. But here this there is the option, okay, message, and it's open for every single one. And you see there is no like that type of number here because I replied every single person's every single message. So you can message me. Yeah, I'm not promising you that I'm gonna reply you instantly. Maybe it will sometimes it takes little time, okay, because I just turn off every notification from every application from my phone. So I don't get any notification if someone messages me or something. I don't get it. But whenever I will see it, I'll reply you. So just use the Twitter to communicate with me. In Forex, 1 minute chart market, most of the time this is fail. What is you teach now? Mm, Tiger Trader, I have no idea about Forex. As I told you that brother, uh, I trade in future market because future market is more precise to market. Forex market is manipulated market, and in Forex market you will never get the precision. I have no idea how people trade the Forex because there is the stop loss. Even I can't put my stop loss. If you ask me about the Forex with confidence, with so much confidence, I will put my stop loss below the breaker. But in Forex, if I take that entry, I have to count the peep, 10 peep, 15 peep. I have to put it where whatever it will let me put. So maybe I have to put it here, maybe here, okay. So I will take my entry here. I'll put my stop loss here. No, I don't see that that's as it trading. Whoever wasting their time in Forex, I believe they should move to future as soon as possible. Otherwise, they're never going to learn anything from for trading. Okay, yeah, very soon Forex market will recover. I believe that. ICT believe that. Whatever I told you just now, that is all by ICT. Okay, that's all ICT told. So I just repeat his word. So very soon, I mean this market will the Forex market will actually recover. All of the future trade will move to the Forex market then again. Okay, before 2020 the COVID, ICT, not only ICT, every single person, every single successful trader, they actually trade in on Forex. After COVID, Forex is now like a manipulated market, and this is called a gentleman market. This future market, okay, this indices market is called as a gentleman market. That's why we trade here. So it's up to you, man. This concept will work on Forex. Can you explain in Euro USD? No, man, I am not going to explain it to Euro USD. But if you are a Forex trader, you have to backtest it. Okay, so if it works over there, then it will work. If it doesn't work, then it is not working over there. Okay, and ICT told that it works in every SA market. I believe it works in every SA market. Maybe not so precisely because the weeks it did damage, and in broker to broker it varies. Okay, so we don't get the actual price in Forex. It depends on broker, so they can easily manipulate you. If you take an entry over there, if you put your stop loss over there, they can easily stop you out. Then it can expand toward the way you are expecting. That's why i don't I don't want to even waste my time on Forex. Okay, my brother, I will go and get on with my day, trying to finish studying 2023 mentorship. Hope you have a good trading week. Allah Hafiz. Allah Hafiz, Said. See you, man. ICT quadrant. Now, brother, all markets are manipulated. I trade GU 1 minute entries, all entries after rate. Uh, all markets are manipulated. All markets means what do you mean by all market? I don't know, but the future market, the manipulation happens in certain time. Okay, like the news time and 9:30 volatility. That's the manipulating time. Okay. Beside that, there is no manipulation. Without the news, without the 9:30 volatility, there is no manipulation. So I can go with confidence that I am not going to be manipulated by something. Okay. But over there in Forex, if you take your entry, the broker easily they can manipulate you and you have no idea, because if you just open another broker, you will see the week close here. If you open another broker, you will see the week actually closed here. So no idea what the exact price is. If you don't understand, I'm just, let me come here. There's some broker, right? Paperstone for then Capital, maybe Binance, Easy Market, some broker. Every broker has different price on Forex. Every single broker has different price on Forex. But the future market, indices market actually, it is the same. Tick by tick, it is the same for every single broker. Whoever allowed you to trade for, I mean, indices, you will get the same price action. But in Forex, you will get different type of price action. That's all I mean to say, brother. FX2 moves smooth during macros. That's cool. ICT content. I mean, brother, all I told you that I I don't trade forex, so I have not that much idea about the forex. But if it works, then I'm happy that yeah, it's working. So I'm not trading. That doesn't mean you are not going to trade that. Obviously, if you like forex market, trade that market, man. Just trade it, because if you, that's your hobby. That's your way to see the market. For me, it's difficult. That's why I love to use to this market. And when I will move, or may, I mean, other better trader, great trader, they will move to forex. Maybe I will move. Okay. Right now, I get the precision every single time. 95% of the time, I get the precise market action. I mean, price action. I love to stay here. Okay, that's all, man. I mean, if I can make it clear. Okay, okay, okay. So guys, it's been a long, I guess. Okay, at the same time, please don't forget to give me a simple like. Just press a like button. That will be grateful. I mean, that I'll be grateful to all of you then. And yeah, it was actually little price action and more about psychology. But I guess, brother, it will help you. Okay, brother, in FX, use speed in trading view and look for all ICT signature. Genie makes money on FX, Euro Trader, etc. ICT, I mean, if I don't get me wrong, all I want to tell is I don't trade Forex because of the manipulation. Because in Forex market, if you are agree or not agree, I don't know, but in Forex market, manipulation happens by human being, by the brokers. Okay, every broker, then they can easily manipulate you. But in future market, I mean the indices market, you are not going to be manipulated by human being or by any kind of broker. That's all I wanted to say. Okay. Now, I'm not telling you that Forex market you are not allowed to trade over there or something like that. No, I'm not telling that. Whatever I told you, I learned it from ICT. I heard it from ICT. That's all, man. That's all. So I didn't want to hurt you, or I didn't want to anything bad about. Uh, Obviously, forex is bad. I don't care. I mean, forex is bad because the manipulation happens. I mean, it's totally different, broker to broker. So it's not good because that's not a precise price action. Every single time, whenever you will take your entry, there's less possibility to be profitable. That's why I don't. I mean, for me, who knows how to avoid the manipulation? Maybe that's easier for them, but I don't want to wait to I mean, let one perfect setup go. I don't want to do that. That's why for me, forex is not good. For me, future is good. That's all I want to say. Okay. If you really know how to use forex market, how to trade forex market, how to avoid the manipulation, please go for that. There's nothing wrong with that. All we need is to be profitable. That's all, man. That's all. Where are you from and what is your original language, bro? Depending on my accent, you're asking me this, man. I'm from Bangladesh and my original language, mother language is Bangla, Bengali. Okay. Tanmoy Dutta, hey brother, hi. What's up? How are you? How are you, man? You're late. Actually, I'm going to close my session for today. Okay, so you're so late. Uh, Tiger Trader, why did you ask me that, brother? Why did you ask me that? So far, I remember you are from Pakistan, and yeah, we are brothers, something like this. Okay, I mean, we are near about neighbor. We are kind of neighbor. So guys, thanks for giving me the likes. That was unexpected. Actually, 24 likes. It's huge from a holiday or from a weekend. You know Urdu. I understand little, but I can't speak. Yeah, I can't speak Urdu or Hindi. I can't, but I understand. Okay, as I have watched so many Bollywood movie and also the Pakistani movie, film actually. So I watched them, so I understand a little bit, but I don't know how to speak. So Dada Akbar, what man Akbar? I'm staying here for how long? Near about 4 hours. Okay, so not 4 hours. Yeah, near about 4 hours. So I have to quit now. Okay, because you're trying hard to speak English. Yeah, man, I'm just struggling to speak in English because sometimes when I think about the price at the same time I think about the English sentence, it makes me confused. Okay, so it's really hard to do both of the things in one time. But I think you guys will understand whatever I want to say to you. Okay, I guess so. Twitter, Twitter, দেখো একবার message করছি. I saw your message, Tanmoy, and I guess I gave you the reply as well. Okay, if I didn't give you, just give me another message. I will reply you, brother. No problem, Tanmoy. Tiger, thanks for understanding, brother. Yeah, my home, I mean, mother tongue is. Yeah, I'll see it, brother. I'll see it, Tanmoy. I'll see it. No problem, brother. My mother tongue is Bengali, and yeah, I live in Portugal. So most of the time, I have no chance to speak in English, but sometimes we speak in English, and most of the time we speak Portuguese. That's why I'm learning. Okay, I'm learning. I'm learning from all of you guys. Thanks for understanding that. That's my weakness. My English, yeah, that's not my weakness actually. That's a medium. When I have decided to explain the understanding what I have about the ICT, I thought about my English. I was thinking when I will start to talk, people will understand or not. And later I find out, okay, maybe most of them, most of you actually getting me. Whatever I'm trying to say or whatever I'm trying to tell, you are getting me. So it made me happy that, okay, it's not actually wasting of the time, kind of success, I will say. So I never, I don't like to be failed. I want to be winner most of the time. And here my challenge is make at least some people to earn at least 200K plus USD. That's my target. I never fail. Okay, so I will make some of you to earn that, and then I will quit. I will quit coming to live. I will quit uploading video. I'll quit Twitter, using Twitter. I will quit every single thing. Okay, then I will just concentrate to my own trading. And yep, that's all, man. I mean, people doesn't actually give a shit, okay, for something like me. I mean, one of my brother actually messaged, not one of, yeah, he specifically he told me that, brother, please open a mentorship and charge some money. Then people, whoever will give you the money, they will take it seriously. Okay. Now the thing is, I'm here only for my inner peace, something like that. I am doing this for my own satisfaction, not for money. That's all. I mean, I'm here. Okay. If you ask me, brother, but you are earning money from the YouTube, that may be little money. Okay. I mean, yeah, near about $130 something by 4 months. It's near about $130. Okay. And you guys know who, I mean, we are the trader. So $130 is nothing to us. I mean, it's huge, but absolutely it's nothing to us. So I'm just using my time so that you guys can get something from me. That's why I'm not interested to do the private mentorship. Now, whoever are not taking me serious in this industry where everyone is selfish, I'm just telling you directly, every single person is selfish over here. No one is teaching you the right thing. They will always keep something in their mind. Always. If you ask me, oh no, man, I'm not keeping anything inside of me. Because if I would keep that, I wouldn't show you every single day, every single time, the same thing again, again, and again. I wouldn't show it to you. As I'm showing it to you, that means I'm not keeping something inside of me. All I am doing so that you guys can get something from me. When I will get at least five people, they will earn 200K and they will just they will let me know, brother, I have earned that money. I will stop coming here, okay? Trust me. You will never see me again. Within 3 to 4 to 5, maximum 6 months. Within 6 months, I will reach to my goal. I will get at least 5 to 6 people, they will earn that much money. Within 6 months. After that, you are never going to get me. I mean, you're never going to see me again. Whatever. Who are taking me seriously here, they will learn. Who is not, they will they won't get anything. For example, water block. Every single person is lying to you. Either they don't know what is water block or they are not sharing the water block with you. Something is happening over there. Okay, I don't know what is happening, but something is happening. It's up to you what you should get and when, where you will get that. I'm not interested to force you anymore, but I'm not interested to do the private mentorship. Okay, I'm not interested. I'll never do that. If I need money, I will trade it by myself. I will just close my session for 1 month, maybe. I will trade for myself. I'll earn some money. I'll come back again. I don't care about that. But private mentorship, no, I don't. I don't want your money. I don't need it. Okay, guys, thanks for joining here for today. And I guess that's all for today. And we will see tomorrow, Monday. Remember, that is the accumulation phase. Don't expect her big run. Okay, don't expect big run. 10 to 15 handle is huge for Monday. 10 to 15 handle, maximum 20 handle. That is huge for Monday. So don't expect huge run to Monday. So that's all for today. Thanks for joining and being with me. See you.